Today is rollover day, so the September contract is the front month. And this is kind of odd. Normally, they roll over on Thursday, and on rollover day, you trade the old contract and you switch to the new contract on the next day. And today, trade station is rolling over on Monday instead of Thursday, which I don't ever remember seeing, but I'm not sure which contract to trade. What I'll do is, after the first bar, I'll check the volume. If the volume is about 30,000, then the September contract is the contract everybody's trading. If the volume is about 10,000, then I'll look at the expiring June contract and see if that's 30,000. If that's 30,000, then I'll trade that. It does not matter really that much when, let me go to the 5-minute chart here. It doesn't matter that much. Most of the bars, this is how the front month, most of the bars will be identical, but one or two bars during the day, there'll be a difference that is significant enough so that it would change how you trade. Like a body might be bigger on the June contract and smaller on the September contract, or there might be a sell signal bar on both contracts and it triggers on the June but not the September. This is the open of the week. Let me attach that. Okay. Markets, we had that huge move up on Apple last week, and we've been sideways for 4 days. The market's deciding, is this an exhaustion gap, and are we going to reverse down here, or is it a measuring gap? The bears tried to get a double top. Here's the neckline, the lowest price in between. The bears wanted to break below the neckline and a measured move down, and now that we're breaking above, the bulls want a measured move up. Whenever you have a breakout mode situation, there's always going to be a double top, a double bottom. There's going to be something that creates a measured move. But you should look at that same distance in both directions. So the bears are looking for a move down to the neckline. The bulls will look for a measured move up. Theoretically, there are some bulls who are buying the breakout and their stop is down here. And traders do not like to risk more than what they hope to gain. So if they're risking this much, they hope to make that much, and they'll have a stop up here. And if a bear sells below that neckline, his stop would be above the double top, and he wants to make as much as he would risk. So he would take profits around the measured move down. That's why you get measured moves. Traders do not like to risk more than what they hope to gain. So they'll set their profit target at least at the size of the risk. On Friday, we had a high one buy signal. We had a new high Wednesday, a pullback, a good buy signal bar on Friday. The bulls would like to go above Friday's high and trigger the buy and then see if we keep going up and this becomes a measuring gap. And the bears are hoping that this is so overdone, we'll pull back. I've been saying that I think we're probably going to do what we did the past 2 years, and that is sell off into October. So 2022, in October, we had a huge rally, and then last year, October, we had a huge rally. Last year, the sell-off began in July, and the year before, it began in January. So I don't know when it will begin, but I think we'll probably sell off into October. And I don't know what the catalyst will be. I think it's purely technical. That traders see the past 2 years sell-offs into October, so I think they'll anticipate a sell-off into October this year. And there's always some news event that will that people will say is the reason for the sell-off. I don't know what that news event will be. Some country having some kind of financial crisis. There's always some military situation that could happen. You got Ukraine, you got the Middle East, you got North Korea. And then politics, you got the debates, You got two old men candidates, one to get a stroke. Who knows what could happen. But when we do sell off, if we do have a pretty good sell-off like the past 2 years, there will be some event that will take place, and the news is going to say the sell-off was due to that event, when in fact the sell-off was coming and it was just looking for an excuse. Weekly chart, very strong rally from last October, but a very big sell-off here, and this might be a final bull flag. We're at the top of a channel. This channel is pretty much parallel to that, and that makes it more likely to lead to some kind of a reversal. So we're in the neighborhood where the market could pull back. 5-minute chart, we're in a bull channel. We had an early low on Friday, and then a series of higher lows for the rest of the day. So a bull channel, but not very strong. Basically a trading range, and the market's been sideways for 4 days now. The bulls are open. We have a double bottom, and this is a perfect double bottom. We want to break above the neckline and a measure move up. And the bears want to break out below the double bottom. Theoretically, their stop will be up here, so they'll look for a measure move down. And right now, we're just waiting. Lots of reversals, and that's what you get in a trading range. Can you buy above one? Taking a chance. It's another higher low in the bull channel. I'm not going to. I'm going to wait to see what we get. Sideways, basically sideways here for about 3 hours, and yesterday was not all that strong. I want to check the volume here. 24,000 contracts. That's big enough to make me think traders are probably trading September. Let me turn off the screen. Okay, I was just checking the contract, the June contract, and the volume is about 10,000. So September has 20,000, June has 10. So it means traders are trading September, and you should trade September today as well. Now the bears are hoping that we get a reversal. So instead of a series of higher highs and higher lows, they want a lower low. This low is below that low. They want a lower high, and they want the market to go down. Trading with stops in the middle of a trading range is one of the worst things to do. And basically sideways here for about 3 hours in the middle of it. So I think better to look to sell higher, better to look to buy lower. So better to wait. We know that 80% of days form either the high or low in the first 18 bars. Yesterday, bar 14 was the low. We know that 90% of days have at least one swing trade coming from a decent buy signal bar. So yesterday, Friday, we have a wedge, 3 reversals up, 1, 2, 3, and a 2-bar reversal closing on its high, a reasonable swing buy, and if the bulls held all day, they made about 20 points, 5, 10, 15, 20. So 90% of days you get a swing trade coming from a good buy or sell signal bar, and 80% of days the high or low is in the first 18 bars. So you can look at that and say 80% times 90% is 72%. So about 70% of days you'll have a swing trade that starts in the first 18 bars. And therefore it's really important to look for swing setups early in the day, because 70% of the time you're going to get a swing that yields 20 points profit and comes from a decent buy or sell signal bar. Here we have a decent buy signal bar. Is this the low of the day? Right now, 20% chance that it is. Here we have a decent sell signal bar. Is this the high of the day? Right now, about 20% chance it is. So A lot of times when it's really unclear like this, traders will wait for a second buy signal bar or a second sell signal bar and then swing trade. You can see not a lot of energy. 90% of the days we break out of the Globex range. This is a 15-minute Globex chart, Globex high. So 90% chance we either go below the blue line or above that blue line. And we went below the line. So we've already broken out of the Globex range. The bulls are hoping that this whole thing is a pullback from this and that we resume up. Let's try to get a good buy signal bar. This bar closes in 4 more minutes. They want a good 15-minute outside up bar closing on its high, hoping it'll attract buyers and then we go up to yesterday's high. And when I say yesterday, I'm talking about, actually this is the Globex high. Yesterday's high is over here. When I talk about yesterday, I talk about trading days. So here's a dividing line between today and yesterday. And the reason I do that is if I'm looking back over here and I see this and I see that, I'm going to call this today and that yesterday. I don't want to be trying to waste time trying to think, is this a Monday? Is that a Friday? So I just say to the right of the line is today, to the left of the line is yesterday. So I think in terms of trading days. On rollover day, all the prices shift. So before the market opened, I moved every one of these lines. Every one of these lines went up, 50 points or so. Now the September is the front month, so I had to move every one of the lines in every one of these little text boxes. I wish TradeStation did it automatically, but it does not. Bulls trying to get a big outside up bar, outside of the prior bar, and went below it, and now it's above it. And they'd like the outside up bar to close above the high of the prior bar. That would be more bullish. I do think being at the top of the channel is resistance, especially when the upper channel line connecting that high and that high is almost parallel to the lower channel line. On the monthly chart, we had a super rally here, 5 consecutive big bull bars. Then we had a bear bar, a big bear bar. And so it's a pullback, a high one buy signal bar, but it's a big bear bar late in a bull trend. And when you get that, usually the market's not going to go up for a lot of bars afterwards. Here, very strong rally, a big bear bar, very similar to this, and we went up for a few months, and then we did that. Will we go up for a few months here, June, July, August, and then do that into October? I don't know. But I still think the odds are traders are going to, a lot of smart traders, a lot of computers know we sold off into October in 2022, off into October in 2023. So I think a lot of the computers will expect that. So it'll become a self-fulfilling prophecy. Don't be in a rush to do anything. Sideways for 3 hours. And today on the open, we have 3 bars, and every bar largely overlaps the other bars. So trading range type of behavior. What happens if 3 becomes a bear bar and 4 becomes a bear bar? Then it might be worth shorting. But at a minimum, at buy, I want to see consecutive bull bars closing near their highs, with at least one being big. So that's a buy above that bull bar. But you're disappointed by this. So what do? You place an order to get out break even. And that's what happened on this bar. And it allowed the bulls above that close or above that bar to get out break even. And we formed a micro double top. Up on 2 and 3, down on 3, up on 4. Here we have consecutive big bear bars, or consecutive bear bars, one being big, closing on its low. So that's sell the close or sell below. And then we had this. So the bears who sold down here were disappointed by that, and they were eager to get out break even, and the market came down there and allowed them to get out. Right now we're on a sell, we're on a buy above 1. Are we on a sell below 2? Well, theoretically not. We were, and then we went above the 2 high, so the bears who sold below 2 are exiting. We're very close to yesterday's close, which is a very important magnet every day, so we should get there. And we're also very close to yesterday's high, so I think we'll probably test that as well. And then we have the all-time high a little bit higher. Will we get there today? I don't know. That's 20 points above where we are now. I'm not sure that we will. There's never a rush to do anything. If this turns into a huge bull trend day, the computers cannot hide it. You'll see a whole bunch of bull bars. You'll see gaps. By a gap, I mean if you see a big bull bar closing near its high and above the high of the prior bar, there's a gap between that close and that high. And then here, this low tested the breakup point that high, and there's a gap. So I always pay attention to morning gaps. There's a gap between this high and that low. And if you get 2 or 3 gaps early in the day, the trend will usually last all day. Here, we have a bull breakout bar, a big bull bar closing near its high and above the high of the prior bar. And then we had a pullback, and this low overlaps these breakout points. The prior bar is a breakout point, and any prior high is a breakout point. So the bars overlap, but the bodies do not. And a lot of institutions use line charts. So here on the candlestick chart, there's no gap, but there is a gap between the bodies. That close and the highest close here. So there's a body gap, and that's still a bullish thing. And something here. So we had outside up on 3. Let me put it in. Okay, over here. Outside up on 3, and now we're outside down on 4. The low of 4 is at or below the low of 3. So now we have consecutive outside bars. We have an OO, and when that happens, I get a bigger blue dot. If you have consecutive inside bars, I have a smaller blue dot. So if this bar is inside of that bar, this bar is inside of that bar. There's another II. The high at or below the high of the prior bar, the low at or above the low of the prior bar, and it's the second consecutive one. Tested yesterday's close, did not quite get there. Bulls hope this is the high of the day. Friday's rally was not strong, and so it reduces the chances that we're going to get a lot of follow-through buying today. And whenever you have a bull channel, 75% of the time you're going to break below the bottom of the channel. So every bull channel is a bear flag, even if it's a really strong bull channel. Move this one. Really strong bull channel, 75% chance you're going to break below. And the opposite is true with bear channels. You get a bear channel, 75% you're going to break above. Bull channel, 75% you're going to break below. 25% of the time when you have a bull channel, you're going to break out above, like right there. But most of the time, you should think of a channel as a flag. So a bear channel is a bull flag, you're going to get a bull breakout. A bear channel is a bull flag, you're going to get a bull breakout. Bull channel, bear flag, bear breakout. Broke out to a new low today, and we closed at a new low today. Both are good for the bears. But so far, more traders bought the one low. More traders bought the close of 4. So more buyers than sellers. So again, we're still having trading range price action. It went above 1, they sold it. It went below 2, they bought it. It went above 3, above 2, they sold it. Below 3, below 1, they bought it. Big bull bar 1, they sold it. Big bear bar 4, they bought it. Trading range behavior. All right, traders are expecting reversals, and they're doing the opposite of what they do in a trend. Trading range trader looks at bar 4 and says, wow, what a great opportunity to buy. Betting on reversals. And yesterday, pretty much all day long, anytime you saw a big bull bar, you could sell and sell more higher. Anytime you see a big bear bar, you can buy and buy more lower, and you're going to make money. But it's hard to do. Most traders trade positions that are too big to allow them to scale in. So when it comes time to add to a position or add a second time to a position, they won't do it. They're just too afraid. But if you're going to be trading with limit orders, trading range style, to do it profitably, you have to be trading small enough so that you can add on and not hesitate. So if you buy the close of 26 and you buy more 5 points lower and 10 points lower, can you take that buy? If you cannot, you can't trade that style of trading. If you buy the close of 26, do you put your stop below 23? No, you're buying near the top of a trading range. You can't put a stop in the middle. And if you don't have any stop, you'd have it down here, or just use a point number of points, maybe 20 points below, planning on buying more 5 points lower, 10 points lower, and getting out 20 points lower. This is a very common occurrence where you have a big bear breakout bar, big bear bar closing in its low, closing below the low of the prior bar 3, and also closing below a prior low 1. So right now this is more bearish than bullish, and the bears are hoping 4 is going to be a bear breakout, and then we're going to channel down and do the opposite of this. The bulls are hoping that 4 is just a pullback in this channel. They're hoping it's like 27.28, like here, and they're trying to reverse it on 5. 5 is important. If it has even a 1-tick bull body, it will reduce the number of traders selling. But if it has a doji bar or a bear body, traders will see that as confirmation of the sell-off, and you'll get traders selling below 5 and below 4. Look at the high of 5, and what do you see? Always look to the left. Tested the breakout point on the way down, the low of 3. The bodies don't overlap, but the bars overlap by a tick or so. So that's still pretty good for the bears. We've got 30 seconds left to the bar. Is 5 going to have a bull body? If it has a bull body, you'll get far fewer traders willing to sell. I said we had consecutive outside bars here. And on the 15-minute Globex chart, we have consecutive outside bars, and they followed consecutive inside bars. So inside, inside, and now outside and outside. Both are breakout mode patterns. Traders are looking for a breakout and the measure move up or down, but really dangerous to trade. For the bears, they're disappointed by 5, but will they exit above 5, or will they exit? If a bear sold below 3, if a bear sold below 1, they need a wide stop above 4. But I think it's probably better not to be short yet. If 5 was a second consecutive bear bar and it closed near its low, then I think you would get more sellers below 5, below 4. Good things for the bears. We tested yesterday's close. 1 fell below 77, so we got a new low. 4 fell below 1. We have another new low. 4 closed below 1, so that's good for the bears. 5, a bull bar, that's not good for the bears. But right now it's a little bit more bearish than bullish. Very often the market there'll be news or a report at 7 o'clock, and the market will make a big move right at 7 o'clock, or a second before, or a second afterwards. I'm going to check up my other computer, see if there's any major report today. I don't see anything, but there still could be a news announcement at 7 o'clock. So you always have to be careful not to close the bar 6, because it's common, even on days when there's no anticipated report, it's common for bar 6 to do something in the final seconds to change its appearance. Bar 6, a multiple of 3, so it corresponds to the close of a 15-minute bar. It also corresponds to the close of a 30-minute bar. Bars often change their appearance right before the bar closes. A 60-minute bar, a lot of times you'll get something on bar 12 that will alter the appearance, bar 24, bar 36. A 5-minute chart. A lot of times if you look at a 1-minute chart, every 5th bar is more likely to be a trend bar, up or down, changing the appearance of the 5-minute bar. Bulls see this as a double bottom and a higher low of 58. So yeah, we fell below 77, but this is a more important higher low. So the bulls are hoping that this is just a second reversal up, above 1, above 5. But big tail, so most bulls are not going to buy above. Now I said the 00 is a breakout mode pattern, so theoretically some bear computers will sell below 4 and buy above 4. Should you buy on a stop above 4? I would not. We were getting many reversals, all Friday and then again today. So buying at the top of anything is a low probability bet. Selling at the bottom is a low probability bet. Daily chart, remember we have a high 1 buy signal bar, and it's a pretty good bar, and it's a very strong bull trend. So without knowing anything else, looking at this chart, today is probably going above yesterday's high. Obviously, if today becomes a big bear day over the next couple of hours, then we probably will not go above yesterday's high. But right now, looking at this chart, we should go above yesterday's high. We have a strong bull trend here, a very strong bull trend here, and a good-looking buy signal bar. So I think traders want to know what's above the high of that bar. This is the high of that bar, yesterday's high. So far today, every bar has alternated, so bull, bear, bull. And now this is the first time today that we've had consecutive bars in the same direction. But how bullish will 6 be? Will it close on its high? No. Like 5, it has a fairly prominent tail above and a fairly prominent tail below. So it's a limit order market, not a stop order market. Some bears selling 5 points above the close of 4, betting that we have to test the close of 4. And some bulls bought the close of 4, and they're exiting here 5 points above the close of 4. So for limit order traders, this is fine. But for stop order traders, I think it's better to wait. And most traders should be stop order traders. Limit order traders, as I said, if you really want to do it well, you have to use wide stops and you have to scale in. And most traders cannot do that because they can add on once, but they have a hard time adding on twice or 3 times. And if you're going to do it profitably, you have to be able to add on 2 or 3 times. And another problem you have, some of you I know were in Orlando a couple of weeks ago at my workshop. And Tom Hugard was there, and he showed a chart where he scaled in during a collapse, and he ended up losing a lot of money. And that's one of the problems with limit order scalpers. You know, a lot of times they'll get in, and so a limit order bear might sell it that high, sell it this high, and keep selling at highs, knowing that chances are the day's not going to keep going up all day, but it'll go up all day often enough so that when you lose, it'll more than erase all the wins that you had. So here, you know, you buy the low, and you say, I can't take it anymore, I'm going to get out. But if you use a wide stop, you know, the buy here and the buy here and the buy here, you would end up with a huge profit. Well, what usually happens is, you know, a person buys at that low, buys at this low, and they hope it doesn't keep going down, and at some point they can't take the pain, and they exit with a huge loss. And that's, you know, it's difficult to hold long when the market is going strongly against you. And most of the time it won't. Most of the time you buy at that low, you buy at this low, it doesn't go down all that far, and you can hold. And most of the time it'll do this. So it might do this 5 times, but do this 1 out of 5 times. But that 1 out of 5, you'll lose so much, it erases your, you know, 4 or 5 prior wins. So unless you're really good, you know, it's a losing strategy. And most people cannot handle it emotionally, and they should not. They should not be using wide stops and scaling in, because they cannot take the pain. When you take the trade, you think you're trading a small position, but after you've added on once or twice, you start to think, oh, this is way too big, and my risk is way too big. And then they can't take the pain, they get out with a big loss. Bears, a lower high double top 4. They're hoping 5, 6 is just a pullback from 4. And for the bulls, they're hoping 4 is a bear trap, and that we are reversing up from a double bottom 1, 4. But a bad buy signal bar 5, a bad entry bar 6. So I still think it's slightly more bearish than bullish. If I just look at a 5-minute chart, it's slightly more bearish than bullish. If I look at the daily chart, I think we're going above yesterday's high. So daily chart, I think we're going up there. You know, best choice, wait. When not clear, there's confusion. When there's confusion, the market is usually a limit order market. Reversals are more likely than trends. So better to wait until there's good evidence of a trend, and then switch to trend trade, and then start taking trend trades. Still sideways for a lot of bars. We have 3 consecutive bull bars, good. 7 closed near its high and at or above the moving average, good, but still in the middle third of a trading range. Better to wait. Is it more bullish or bearish right now? Probably more bullish. You know, okay, we just broke above the 00, so that's good for the bulls. The high of 4 did not quite get to the close of yesterday, so many traders believed that it was not a complete test. And then we have the daily bulls looking at a very, very bullish chart, and Friday is a very good buy signal bar. So it looks like we're going to get up above Friday's high. Well, if you buy here at the 4 high, if you do, your stop is below 4, so you trade small. It's probably better to wait for another bar or 2. If 5 closed near its high, then I would say this was a good buy setup for a possible low of the day. 7 is 3 bars into the bull trend. and it's fairly high up in the range, so that will attract fewer buyers. Okay, closed at a new high of the day, closed above the 00. So right now, it's always in long, 4 consecutive bull bars, closed at a new high of the day, closed above the moving average. Can you use a tight stop below 8, below 7? And I think if you're buying here, you put your stop below 4. We're still in our trading range. I think most bulls are waiting for more confirmation. Will 10 be a second consecutive bull bar? Will we pull back and test the open of the day and then reverse up from the moving average and get a higher low? You know, that would be another opportunity to buy. Can you sell here? Betting on another reversal down? I would not. We've got 4 consecutive bull bars. The past 2 closed near their highs. They closed above the moving average. The body of the second bar, 8, is completely above the moving average. You know, that's 60% chance of a move up, a couple legs up. So traders will buy the first reversal down. What happens if 9 is a big bear bar closing near its low? Then I think the bulls give up. Otherwise, their stop is below 4, below the day. So the bears need something that looks like 60 or even a bigger bear body before bears will short. In 00, like this, 2, 3, 4, it's usually an expanding triangle on a smaller time frame. And if we get a reversal here, it would be an expanding triangle on this time frame. Moving up and down and up and down and up. One-minute chart. Expand. 1, 2, 3. It's really not an expanding triangle. It may be 1, 2, 3, 4. Yeah, it's really not technically an expanding triangle, even though it's an 00. But every 00 and every II is on both a double top and a double bottom. We have a double top here. We have a double bottom here. This is the 1-minute chart. Bears trying to prevent today from going above yesterday's high. Because remember, on the daily chart, yesterday, Friday, is a good buy signal bar in a strong bull trend. And the bears do not want a strong buy signal to trigger. So the bears are selling here, trying to prevent the market from going above yesterday's high. But we should go above yesterday's high, whether or not we pull back here. Is 9 bearish enough to attract a lot of sellers? Probably not. Though probably more buyers than sellers below 9. And the bulls stop below 4, low of the day. What happens if we get 2 or 3 big bear bars? Then bulls will exit. Bears might short. But right now we're on a buy. I think the buy is above 7. And the bulls are looking for a 20-point swing, at least 15-point swing, which would mean they're hoping that we get 15 or 20 points above the high of 7. Do the bulls get out below 9? I would not. I think if you're long or if you're buying at the market, your stop is below 4, which is 10 points down, so you have to trade small. Bears want a parabolic wedge, a type bull channel with 3 reversals. Up on 6, down on 7, up on 8, and then down on 9, and up on 10, and the bears hope down on 10 or 11. And getting near the end of the first hour, another 12 minutes remaining. Bulls have a small pullback bull trend and a double bottom. The neckline is the highest price between the 2 bottoms. They want to break above the neckline and a measure move up. 60-minute chart, we're in a bull trend. We're pulling down to the moving average. It's more likely that we're going higher than lower. the open, we're still in the open. The market does not yet have a clear trend. In the open, 50% chance any strong move up or down will reverse. One strong move at reverse. 4 strong move at reverse. And then here we have a 7-bar bull micro channel and 50% chance it's going to reverse. I think it's probably less than 50% at this point. I think the market thinks we're on a buy above 7. We might come down and test the 7 high. But if we do, we'll probably form a higher low and then continue up. Perfect double bottom here. Bears will try to get a double top here or a double top here. Micro double top, 9, 10, up on 9, down on 10. Excuse me, up on 9, down on 9, up on 10, and the bears went down on 11. And as I said, small parabolic wedge, a tight bull channel with 3 legs up, 1, pause, 2, pause, 3. But probably only a minor reversal. You might come down, do a 50% pullback, and test the moving average, test the 6 high, 5, a bad looking buy signal bar. So we might test the 5 high as well. Yesterday, we had reversal and we came down here and tested the buy signal bar. Through 14, you can argue that was the buy signal bar. The bull trend started when we went above it. It was a bad buy signal bar, it was a bear bar. And whenever there's a bad buy signal bar, the market often comes and tests it. And if you get that on the test, that's another buy. And then this tested here, another buy. Can today be a huge bull trend day? Any day can be a huge bull trend day, but we probably will need another hour to find out. Because if it's going to be a big bull trend day, most of the time you're going to get at least 2 gaps or 1 gap and 1 body gap. And that was one of the problems with Friday. That's why it was not a big bull trend day. We didn't get gaps and body gaps. Breakout point gap. This close overlapped that breakout point, so it's not a body gap, but there's a gap here, this pullback, and that breakout point. On the way down, this broke out of what? It broke out of that. The pullback is a gap between this high and that low. Then we broke out again, rolled that. This pullback did not overlap that. So we have a gap between the high of the pullback and the low of the breakout point. So you get a couple of gaps, you're probably going to trend for the entire day. A breakout, what did we break out of? Well, we broke out of that, and we broke out of that, and we pulled back, and there's a gap. A breakout, we broke out of that, we pulled back, there's a gap. So 2 gaps early in the bull trend, first couple hours or so, you're probably going to trend all day. Now, parabolic wedge might get a couple legs sideways or down, but is anybody going to sell below 10? I would not. It's a 7-bar bull micro channel. Every low since bar 4, every low at or above the low of the prior bar. And when you get a reversal, traders typically buy the first reversal. The bear's a double top, but a bull bar, 10, a bad sell signal bar, so probably more buyers 10 low and 5 points lower. So nothing to sell yet. Still on the buy above 7. And 7 is where it became long, not 5. 5 is a bad buy signal bar. Tail. But 7, a bull bar closing near its high, even though the buy is not big. Bull bar closing near its high and closing at or above the moving average. And a 3rd consecutive bull bar after what now is a bear trap, trapping bears into hoping this was going to be the start of a bear trend, and said we broke above its high. Traders are fighting over the appearance of the first hour, first 60-minute bar. You can see sideways for about 5 hours over here, and sideways pretty much all day Friday, even though slightly bullish. The bulls would like the hour to close on its high. Okay, this is the final bar of the hour. Always in long, but stop below 4, the low of the day. And for the bears, there's nothing to sell yet. The bears, at a minimum, would like the hour to close below its midpoint. And they would like the hour to have a bear body, so they would like bar 12 to close below the open of 1, the open of the week, open of the day. And that would be good for the bears. And so if it's good for the bears, it's bad for the bulls. And if the bulls are truly in control, they will be able to prevent that from happening. If you're flat, I think that's probably the best choice for most traders. There's nothing to sell. And if you're long, we may test the 7 high or the 5 high, so you need a stop below 4, and you have to be trading small. That's the end of the hour. And the hour was basically a small bull bar. You can call it a doji, big tail above, big tail below. This is the 3rd consecutive bull bar, and we've been working higher now for 8 bars. So it's slightly bullish, but not strongly bullish. And we're tested the open of the day, tested the moving average, tested the 7 high. And for the bulls, I think they're still long, stop below 5. Can you buy at the market and put a stop below 5? You probably can. Other bulls will look for a stop entry. They'll wait for a good buy signal bar. Because this is a parabolic wedge, it's a type of buy climax. When you get profit taking, you typically get a couple legs down. But the parabolic wedge does not have many bars. It's possible that we've already had 2 legs down on 11, and then up on the close of 11, and then down over 12. Not a good high 1 buy signal bar, 12. So it might be more sellers than buyers above 12, so I would not buy above 12. Can the bulls get out below 12? I still think the bulls need to stop below 4. Traders want to know what will happen above yesterday's high. That's a good buy signal bar on the daily chart. We also have 4 sideways bars. There may be more sellers than buyers above. And if we do get a reversal down up here, then we'd have a wedge, 3 highs, 1, 2, and then 3. So we could get a reasonable sell signal if we go above yesterday's high and reverse. We still might get a couple legs sideways to down here after this small parabolic wedge. Lower high double top, but a bull bar, and always in long. So probably more buyers than sellers below 14. Some bulls will get out below 12, but I still think it's better to have the stop below 4. If 14 was a reasonably good sell signal bar, you could get out there. But right now, I think the stop is down here, and the bears have a double top, 10, 14, but both are bull bars. So probably buyers below. I would not be selling yet. The bulls hope that the weak bull trend becomes a strong bull trend if we break out above yesterday's high. The bears have a double top, neckline here. So the bulls are hoping we break above it and go up for a measured move. And the bears are hoping that this is a double top and that this is a pullback from the double top and that we go down. Here's a double bottom pullback. Here's a double bottom and then a pullback and a rally. Here's a double top. The bears are hoping this is a pullback and that we get a reversal down. Still more bullish than bearish, but not very bullish yet. What about exiting longs below 12? The neckline of this smaller double top. I would not. I think if you're long, it's better to have you stop below here. And I would only be trading small because it's not very bullish yet. If it becomes more bullish, you can add to your position as it goes up. And if you're flat, you can wait for it to become more bullish and then buy. If you're flat, it's fine. If you look at, you should be a stop order trader, at least until you're consistently profitable. You should only trade with stops. And if you look at all the trades today, there's only one stop order buy, and that was above bar 7, and you could have made 5 points, and that was it. A stop order sell below 2, you would have lost money. It would have it went above the 2 high before you could have made 5 points. So no rush. You got to follow the market, not try to take a position and then hope the market does what you want it to do. Can you sell below 16 if it closes near its low? If it has a big enough body, you can sell out of longs, and I don't think that's a big enough body, so it's okay to hold long. If you hold long, where's your stop? Is it still below 3? It probably is, but you will get out before it gets there. And for the bears, I think it's just not strong enough to short, so I think the bears should wait. If 16 had a bigger body, then I think you can short it, but it's just not big enough. It's not a big enough rejection of yesterday's high, and yesterday's a good-looking buy signal bar on the daily chart, so I still think we're going to go above yesterday's high. Bar 16, normally the market will not begin a trend between bar 12 and bar 16. But 16 sometimes is the start of a trend. However, to me, it's not good enough yet to sell. It's a small bear bar. It's a lower high double top today. It's a double top pullback, so double top here and pullback here. But it's a small pullback bull trend. And this is like a breakout pullback and channel. So it's still more likely that will go higher. So probably more buyers than sellers around the 16 low and below. When I say this is a small pullback bull trend, I mean it's trending up. We have a higher low. Here we have a higher high, and the pullbacks are relatively small. And they're not even big enough for bears to make a scalp. So small pullback bull trend, but not very bullish yet. We're not getting, we have a body gap. The 12 close did not fall below the 1 close, so we saw the gap on the line chart. I'm going to turn the screen off for a minute and I'm going to create a 1 minute, a 1 bar average. Okay, this is a line chart. It's a 1 bar average, and you can see this low does not overlap this high, so we have a gap there. And disable that. Trying to break above the high of the day. More importantly, we're trying to break above yesterday's high, which is a buy signal bar on the daily chart. And I said I thought we would trigger that buy today. We just did. The bears want a reversal down for a wedge 4 and 10 and 18, and the bulls want a strong breakout and then a measured move up. They'd like to get up to the all-time high, which is around the measured move up based upon the height of this range. We're in a bull trend, so it's more likely that we're going to go higher, but it's not like 60% chance. It's maybe 55%. It's not a very strong bull trend. 45% chance we get the wedge top, 1, 2, and then 3. The bull's trying to create a clear, strong bull trend. Remember, their minimum goal is 20 points above a good buy signal bar, which is 7. So they're trying to get up 20 points above 7. We have a new high, so I would raise my stop to below the most recent low, the low from that high. So bulls, I think, have their stop below 12 now. How strong a breakout can the bulls get? The bigger the bar is, the more it closes on its high. The further it closes above yesterday's high, the more likely we'll get a measured move up from this low to the double top. And the fewer of those things the bulls get, the less likely we'll go up for a measured move. And the bears need a reversal with a good sell signal bar. They're not going to get it on 18 probably, but they might get it on 19. So the bears need a bear bar closing near its low. We have a double top. We're breaking above the double top, and the bulls want a measured move up. And that is about 20 points above 7, which is what I said the swing bulls want. Okay to be long, okay to buy. If you buy, your stop is below 12. If you get a reversal on 19 or 20, you get out below the reversal bar. Important bar. If it closes near its high, then we'll have consecutive closes above resistance, the double top, and we'll have the body of the second strong bull bar completely above the resistance. And there would be then a 60% chance that we will go up for a measured move, and a 70% chance that we'll get at least one more small leg sideways to up. So the appearance of bar 19 when it closes is important. What happens if it closes in its middle? Then what I just said will not apply. The bulls need 19 to close around its high. That would be a characteristic of a strong bull trend. We've had a weak bull trend so far, and the bulls convert it into a strong bull trend. What happens if it has a 2-point tall tail on top? That increases the chances we'll get a pullback. But the bears need a very strong bear bar to get a reversal. And if 19 closes with a small tail on top, 70% chance we'll get at least a small second leg up. So both have some sense of that. And the bears are trying hard to stop the bulls from having a very strong second bar. The bulls are trying hard to get the strong second bar. Can you buy the market, buy the close? We're always in long, and if it closes with a 1-point tail or a smaller tail, you can buy the market, buy the close. Maybe put your stop below 12. You would get out before your stop got hit, but that would be a starting point. If you get a reversal down from a strong breakout like this, the first target is one tick below the breakout, below 18. So that's usually a bad place to put a stop. But, I would look to the left for some other stop, below 15, below 12. But if we get a bear bar closing near its low 20, it's probably worth the bulls exiting. Getting near the Globex high, but the Globex high is less important now that we've already gone below the Globex low. Once you've gone below the Globex low, I think the other extreme is less important. But it looks like we're probably going above the Globex high, and since I think we're going up here, we probably will go above the Globex high. We might pull back at any time, but right now, I think 70% chance we're going to go for some kind of a measured move. And the obvious one is a breakout of a double top. That doesn't mean we go straight up. You know, we may pull back and go sideways for an hour or two, but that's a reasonable target. The bulls obviously would like to get a new all-time high. Can this be a bull trap? And can we reverse down on 21? And this becomes the high of the day. There's maybe 20% chance, you know, reasonable to exit longs below a decent sized bear body closing near its low, but I would not short. This is a reasonable buy. And if you have a reasonable buy, 60% of the time you can make money by scaling in lower, and 80% of the time you can avoid a loss by scaling in lower. Reasonable to buy the close. So if you wait to buy above a bull bar closing near its high, 60% of the time you'll get all the way back to your first price, and you can get out with a profit on your second buy and break even on your first buy. Probably reasonable to buy the close. So 80% chance you're not going to lose money. An opportunity to get out, break even. Even this, reasonable to buy the close. So 80% chance if you take it, use a wide stop and scale in, you're not going to lose money. So if you buy it, you wait for the market to fall more than the size of a scalp, and then you wait for a bull bar closing near its high, and you buy more above that bar. And if you do, 80% of the time, it'll get to the midpoint of your two buys, allowing you to get out without a loss. And 60% of the time, it'll go all the way back to your first buy, and you can get out break even on your first buy with a profit on your lower buy. So if you bought that close or this close, let's say you bought that close, and then you bought more above a bull bar closing near its high here, your average price is here. 80% of the time, it's going to get there. And what happened when it got there? A lot of bulls decided to just get out break even on their entire trade. They lost money on that, and they made as much as they lost on this, so they can get out without a loss. So 80% of the time it's going to get to the midpoint, and 60% of the time it'll get all the way back to your first buy, allowing you to get out break even on your first buy and with a profit on your lower buy. Probably going to pull back soon. It's possible we can just go straight up to the 20-point target and the measured move target, but I think it's more likely we'll pull back at least a little bit before. There's still room for a scalp. So if a person bought here, you know, they still have more than 5 points potential profit if they're looking for a scalp. The problem they have right now is they probably have to use a wide stop to get that scalp. But it's really not any different from a swing bull holding long. So it doesn't matter where you bought. If you bought above 7, or if you bought below 10, or if you bought above 18, it doesn't matter. You know, right now, this is where you are, and your stop probably is below 12. You'll get out before then, but that's where you have a stop right now, just in case it suddenly crashes. And the risk for all those bulls, whether they bought down here or up here, their risk is the same. And the remaining reward is the same. We're getting near the end of the second hour. And so far, a pretty good looking buy signal bar, 60-minute chart. We have a double bottom with a breaking above the neckline, and the bulls want a measured move up. 60-minute chart and a pretty good bull trend. As I said about an hour ago, it looks like we're probably going higher. Daily chart, good bull trend, and that's why I said I thought we would go above yesterday's high, which we did. Some profit taking, the market pulled back on 21, but the bulls bought it. Some computers are looking to buy small pullbacks, 1 point down, 2 points down, 3 points down. Others will buy below the low of the prior bar, below 22, below 21. But whenever you get a doji bar fairly late in a bull trend, it's a warning that bulls are starting to take profits. And oftentimes it ends up being the start of a trading range. The bulls are trying to get here. If you're long, can you sell with a limit order there, or sell with a limit order 20 points, 82 ticks above 7? Actually, your limit order would be 81 ticks above 7. The bulls are looking for 20 points. If they bought 1 tick above 7, 20 points is 80 ticks, so they place a limit order 80 ticks above their buy, so that's 81 ticks above 7, and it has to go 1 tick more to get filled. So for the bulls, there's a magnet up there. They need it to go 82 ticks above 7. And 82 ticks above 7, let me do that. And it's almost exactly right there. That's about 82 ticks above 7. So the bulls need it to get there, and it probably will get there. And, very close to the all-time high, so we may even go higher. Weak bull trend yesterday and early today. Now, currently a stronger bull trend. Very close to the 20-point target. And it's common for the market to get close to it and then pull back. So I think we'll probably pull back before we get there. But there probably will be bulls buying with a limit order 5 points below that target, betting it'll get there and they can make that 5 points. Can you short below 23? No. No. You can get out of longs, lower bear bar closing near its low. But even then, you don't have to. You can still keep a stop, way down here or here. And this is a buy the close market. So traders will buy, betting on one of two things. It goes up and they can make at least a scalp, or it'll go down and they can buy more and then it will come back up. Like I showed you a few minutes ago, that reasonable buy. This is a reasonable buy. But you can only take it and play it as a reasonable buy if you're going to trade it appropriately, use a wide stop and scale in more lower above a bull bar closing near its high. If you are unable to do that, you do not have an 80% chance of avoiding a loss. You have maybe a 60% chance of avoiding a loss. I'm going to turn the screen off for a moment. I want to check something. As most of you know, I'm writing a new book. It's going to be a series of books. And let me just check a couple of things here. I'm writing a new book. It's going to be a series of books. And let me just check a couple of things here. Okay, I just checked. I've now completed 533 charts. So I've been working hard on producing the charts. So I've been working hard on producing the charts. And this is a section, chapter 6, section 41. Chapter 6 has a lot of sections, and it's a section about disappointed bulls after a reasonable buy. That's just what we talked about. There's an example. Reasonable buy. If you use a wide stop and scale in, you buy more above a bull bar closing near its high, and 80% of the time it's going to get at least to the midpoint of your two buys, and 60% of the time it'll get all the way to your first buy, allowing you to get out, break even on your first buy with a profit on your lower buy. Here, it did not quite get to the first buy, but you could still get out at the midpoint of your two buys. You bought there, you bought more here, and your midpoint is right around there. Reasonable buy, wait for a bull bar closing near its high, more than the size of a scalp below, buy more there or here, and 80% of the time it's going to go one tick above your average entry price, which it did. So if you bought above that, it went just above, and you can see it just went a fraction of a tick above or one tick above, and a lot of the bulls exited. They were so disappointed by that and by this, they decided that it's better just to get out break even, which is what they did there. Let me close this out. Can you place a limit order to go short there? Thinking a lot of bulls will take profits here. I would not short. It's a really strong bull breakout. So 70% chance we're going to get at least a small second leg sideways to up. So that means 70% chance traders will buy the first pullback. You can see we're within a tick of the target. So we're 81 ticks above 7, at least I think we are. $54.96. No, that's not quite. That's $55.19. So it has to go a little bit higher. So it has to go a little bit higher. Okay, so that is, it's almost exactly the measure move up. Yeah, the target for the bulls who bought above 7 is one tick above here. This pink line, the measure move, is 81 ticks above the buy signal bar. I want to say one other thing about, I said 6 decent bull bars. It's actually 7 bull bars. If you have a breakout, normally it has a hard time going more than 6 bars without a pullback. So we may get a pullback here. We're getting near the end of the hour, bar 24, and the bulls would like a 60-minute bar closing near its high and closing above resistance. So this lower high, the neckline of this double bottom, the bulls would like this hour to close above that. That would increase the chances that we're going higher. 60-minute chart, the bulls want a measured move up. We have a breakout here, and we broke above these bars. So their measured move target would be up here at a new all-time high. 6 pretty good bull bars. Usually, you're going to get a pullback. 6 is kind of a magic number. I don't know why, but 5, 7, 6 is pretty much the average where you start to get a pullback. A pullback could be just a bear bar, it could be just a doji bar. The chances it could be a bar with a high at or below the high of the prior bar. Those are all small pullbacks. As for a reversal, this is too many bars. So even if this ends up being a high of the day, we'll still probably have to get a micro double top. 70% chance, it's probably more than 70% chance that we have to get at least a small second leg sideways to up after this many bull bars. And sometimes the second leg is just one little bar to up after this many bull bars. And sometimes the second leg is just one little bar. Here, strong breakout. The second leg up was just one little bar. Pretty strong breakout. And the second leg was just one little bar, a little bit above that. Strong breakout, second leg, just one little bar. Strong breakout, second leg was 4 bars. And it was more sideways than up. Here, sideways. It did not go above that, so second leg sideways instead of up. All right, so the bears want a reversal. I would not sell the first bar. I would wait for 2 or 3 bear bars. And even then, I would, unless they were very strong bear bars. And for the bulls, it's reasonable to get out below a bear bar closing below its midpoint, but you don't have to. You could use a wide stop and scale in. Chances are we're not going to go straight down. And you will get disappointed bulls if 24 remains a bear bar. And a lot of them will place a limit order to get out break even, or a tick or two below break even. And that's how you get micro double tops. If you have enough bulls disappointed that they're going to try to exit around break even, when it gets there, it reverses down. So you might get a micro double top there. But right now, we're probably going higher. We're probably going to get to that measured move, and we're probably going to get to that blue line, which is 82 ticks above bar 7. And there might be some profit taking there, both because it's a measured move and because it's 82 ticks above a reasonable buy setup. And for the bears, nothing to short yet. Can we, if we get 2 or 3 big bear bars, even then I don't think I'll short. I would rather wait for a second leg up and then short. All right, Rose is going to take over. I hope everybody has a good day. Chances are we're going to go higher. I don't know that we're going to go a lot higher. The trend, even though it's reasonably good, the bars are not all that big. So we may end up just forming an upper trading range. So trading range breakout and then an upper trading range. It could be sloped up a little bit, it could be sloped down a little bit, but I suspect that we're probably going to ultimately end up in a trading range, and it will be a trending trading range day. Trend, breakout, and then another trading range. Okay, Rose is going to take over. I hope you have a good day.
Oh, I am so sorry. Sorry about that. I've said all these great things and then just looked at the Rick's message. And I'm trying to super what she's trying to say. I am so sorry, everybody. It's because I did unmute myself on my headset, but never unmuted myself on the application, and that's on a whole different window, which is not where I'm looking at. And I apologize. So I'm going to start again. So basically what I was saying is that, yeah, we have a really good, 7-bar channel here, 1, 2, 3, 4, 5, 6, 7. Problem here is that the first 18 bars, the 18th bar is the breakout bar and a follow through. So we're going to get a follow through buying. But the problem here is this trading range, okay? This trading range right here kind of weakens, okay, the quick pullback and go long. But we have an outside update today, all right? So we have inside, outside, inside. So that's IOI, and today is another O, right? We trap the bears and immediately start to buy and then go back up here. Not today, obviously, I'm sorry about that. So we have a breakout and then go back up, right? Inside, here, inside day. When I see something like this outside, inside, here's what I did at the open. I expected this inside bar's high to be tested. And the reason why I start here is the similar things happening here, except that we don't have a trap. Some will say this is a trap. It really is, but not as a trap like this, okay? So we have an outside up day already. It's not really an outside bar, but you see this outside bar, you get an inside bar. We are, let me see, I can actually change this now that we have, I no longer need to use this. So I looked for bullishness at the open, and I kind of played against bears on the 5-minute chart by looking at the daily chart, okay? So a similar thing that has happened here. I'm applying that logic to here, and this is kind of an island top. So I have been favoring the long entries today rather than short entries, but I've taken some short entries as well. But most of my longer trades, longer period of trades, were all long trades. So this is the outside bar followed by an inside bar. So basically what I'm looking for is a stop underneath this bar, entry above this bar's high, which is Friday, and the market is trying to possibly continue to reach this area. I mean, we have a measured move here, which is great. Some actually measure like this with the stop underneath. So we do have a 75.75 target, 55.75. Market could reach there, so it's kind of working out. This was a much obvious stop trap here. This isn't all that, but it's still the same principles. Now I'm looking for follow through. If we don't get follow through, can the bar collapse? This is a trading range. Trading range lows, trading range highs. Island tops generally reverse, but if we keep getting breakouts, then we don't need to worry about it. Right now, I'm still hopeful that market is going to keep moving up long term. Last week's high is magnet, which is 55.1925, which is right there. And we have a Globex is outside up. We tested the Globex low and it's Globex high. Got a breakout. We came down and tested the Globex high breakout point. If we close a bull bar, market could continue to go higher. So third bear bar didn't really close all that great, not good. I preferred the body at least be on its mid-level, but still 3 bear bars. So we're going sideways now, and the bears want another leg down. But we may not get it until we go test the high. I've exited the short, so it was nothing but a quick scalp for me because it was a counter trade. I took profit here, and then I just saw it. There's an opportunity here. We're way too gapped up from the EMA, so I could just grab a couple of points, and it worked out just fine. But still, it's bullish. Let's see if we can go and test the highs again, prior high. Bears on a second leg there, but all this is a pullback for bulls. They see this as pullback. Bulls who've been long, still they want a measured new target. But this puts us in some kind of a trading range. This move right here. Even if we come back from here, I'm going to look for buyers underneath bar 20, 21 area or EMA. So even if we cannot make new highs and start to come down, sometimes we go up and test this high and bears get their second leg. And then they can move the market down to 55.07 is 07.50 area. Buyers will be waiting there. It's the leg. I tried to explain earlier and I was on mute. So what I was doing is I was counting, okay? So that's basically within this leg, you got 3 pushes. That's the last leg starting point. That last leg starting point is either 21 or 20 low. I'd say 21 low. So that's why market wants to come down there probably. Hey, welcome back. Where did you move? Now I'm curious. Did you just move next door? Somebody did in my neighborhood. Nice. Well, congratulations, and I hope it's a good move for you and brings lots of blessings. What I think it's going to get even more wild with all the election is coming back up. We had this dog and pony show, right? With is the last election. So I mean, this is going to be crazy, another crazy ride. So you guys have to be very careful. I don't know if we're going to get a lot of volatility. Most likely we will. But the market is doing pretty good. It's keep pushing higher and higher. I think the Goldman Sachs or another institution said that we're going to go above like 6,000, and I mean that's wonderful. That's all great for all of us, except that after that it could be free fall. So they're trying to pull the market as high as possible, and there's cash in, and then election rolls in. You know, things are going to go bad, and the market will eventually, what goes up must come down, right? So we'll see how that goes. But either way, we are day traders, so it doesn't bother us. We'll just trade what's in front of us. So far, market is bullish. We do have a trading range still. We still haven't really taken out this top of the trading range, so we have a really large trading range here. And we are above these 66%, so market wants, we're on the upper third of this large trading range, which is a sell zone. So we did this exercise on Friday, but just to repeat it before I go grab some lunch. Okay. So we are in the sell zone. Upper third is the sell zone. Market has been doing great. We could go test these highs and then trap and get a bull trap and then reverse it back down to the moving average. But we get a second sell is opportunity here. Market will try to go all the way down, probably to this breakout point. So we'll see. But if we keep the bulls above this upper third midpoint, which is this dash line, then we're going to keep going higher. So far, it's struggling. I don't know. But this is that sideway and second leg, possible second leg down for bears here. There might be some sellers underneath bar 28 waiting to be filled. Second leg bears trying to sell is underneath bar 28. So the moment they enter, they're going to look for a 1 point move. ATR is small. It's 2.25, so 2.25. So there's a 1 point scalp there. Okay. No one really entered anything there, so they're safe. But they have probably moved the sell order underneath 29 and now entered, and they're looking for a 1 point from there. So 1025 was their entry. Is 925 is their 1 point scalp. That'll be a scalp, but they can hold is longer, but they haven't really scalped anything. So those bears did not make any money there, as far as I'm concerned. In fact, it has to actually not only just go is 925, it has to hit 955, 9 to give them a point. But it is the second leg. Bulls want a double bottom, and they want to keep going higher. They want to trap the bears, but these bears did not make any money. So there's 2 bear bars here. More bears, limit bears, probably will sell the pullback to try to break even. as they sold underneath 29. That puts us into a sideways. Because it's a tight trading range and the bears are stuck is underneath bar 29, they're probably going to try to sell up here and try to get a break even. Machine's already selling, you can see. It's the second sell and it's reasonable, so but you do something reasonable and it doesn't work. And it's because you're looking for a reversal down, but look at all these wicks, right? It's not a good stop order market. So what do? They sell with limit and they try to break even before bulls close a bull body. Because it is the second entry long. So I'm sorry, I wasn't listening. Did he say 81 ticks? So that's, hold on. That's like 40 points or something. Yeah. I'm sorry, 20 points. So then that's 20 points plus 1, 20, 25. So he's looking for a 20 point up because he probably looked for a 10 point from there and got it. And he's looking for a 20 point swing. And it's also measured move, which is exactly where his 81 tick. Well, why? Bear's trap there. We got inside bars, right? 2 is 1. You have an inside bar 5. A reasonable bar is some will buy above it, some will sell above it and try to get a break even. So if anybody sold here, market opened here, came down, gave them a possibly break even or whatever the price to get them out of the trade before going back up. So now you have up, pullback 7, and it's a bull close. Everybody will place a buy order 1 tick above bar 7. They are looking for those highs to be tested, possibly those highs to be tested. So, and then they get it. So they get with bar 18 is you have a breakout is with bar 18. Market may have already seen the low of day, so it's trying to get a better high of day. Got a magnet above, which is a high of last week. You got a measured move. You got Asia 1 and 2R, which is 19. So it's a very good confluence area. And now the second leg trapped the bears. We'll see a double bottom, but you're in a trading range. Bears are disappointed. There's a trading range within a trading range, small trading range within a bigger trading range. So they're trying to sell is above the bar that they sold under 29, 2 bear bars. They're still trying to break even. They want market to come down to 1 tick low of 29. But it's difficult. If the bar closes bearish, then yes. Bulls want to test a high because they think that they deserve it because the second leg is failed and trapped the bears once again. And that puts us in a sideways market. If the bears start to close below 26 low, then they might get a chance here to bring market down, but that's not really set up yet, so it's still bullish. So you got a high 1, you got a high 2, already triggered, and bulls want to test the prior highs. Bulls want follow through buying into 29, 29.50 area above. Strong bull close. Market is still trying to make its way to the prior high and the measured mean target. All right, just about there. A little bit more room. 1950, we could go test the prior. Last week's high, test 1 tick above before coming down perhaps. I did go long because of this high 2 situation here, which I called. And even though it was we were testing 2 bear bar highs, I think the machines already exited. They sold, came down, closed up, and then you got a second bar 31 closing like that. It's just there's no point of staying in a short. Like I said, this was a counter trades, and this was all pullback. And the second leg trap, you got to look to buy if you exited. If you haven't exited, right, your stop is down here. Now that we have taken out that, you can put your stop here, right? So now we're taking out 23. If that bar closes like that, your stop goes under 26. Measured move is the target. So here we are at the measured move, but I like to see the last week's high tested just go at least 1 tick above if market can make it. But I've scalped a little bit as we made a new high at the measured move. I'm holding a runner just to see where this market is going to go. If they go is to the magnet, that's great. I'll be making more money, but I'm getting ready to take profit there as well. Because Asia 2R is also a magnet, so that's 19, 1925, 1950. No, that's 1925. Okay. So 1925 seems like a good place. My stop is at break even. I'm going to go grab something to eat very quickly and be right back before or at 12:30 since I started earlier. I do have a runner, but in case this comes down because we have a double top and we cannot close a bull bar above 23 high and suddenly we collapse, I don't want to be in the long trade with a runner. So I'm risk-free at the moment, and I'm going to step away from my desk. Be right back soon. I'm going to mute myself now. So market reached a 40 point from here. Okay. So this is really good, but it's also 2 times the measured move. It's also, let's see. Doesn't mean that it's going to reverse quickly. It could still go up a little bit more before coming down. It's gapped up a lot from the EMA. So you got a leg 1, leg 2, leg 3. Now you have proper leg, 3rd leg up. If we start to come down, I need to see bears trying to close these gaps, but I did say that we're going to get up here and look at this. I think it's going to keep drifting. This is where it's trying to go now. look at that. So I came back and move my stop higher and higher and higher. So basically I'm trading on a stop here. And that target is 33.75. But we will go sideways and down eventually. Now we are 20 plus bars gapping up from this moving average. So you have bar 14, 34, that's 20. I mean, this is just way too climactic. But it's trying to reach somewhere, and that somewhere is there. Oh, so close. But we didn't really tag it. Unless I measured it wrong. Because these are not really snapping. I have to actually zoom in. This one seems to be okay. Yeah, we did touch. So that would have been 33.50. So I was wrong there. One tick. So we have touched it. What can happen here is, I mean, we can keep going up and up and up, but we have gapped up way too much. So I need to see a good sell signal bar or some kind of a profit taking bar before I do anything. But eventually what it's going to do is it's going to get a couple of legs sideways back to moving average, and the probably buyers will be at the moving average. Fed is scheduled to speak shortly. Fed Parker. So that could actually pull the market down. That's the Patrick Harker at 1 p.m. in 10 minutes. In 10 minutes. Is my data behind or something? 33. No. Thank you. So close. I love that song. That's Metallica, right? One of the best songs of our 90s. Classic. Market is trying to get about 5 extra points from above 40. They close 6, then they're going to get their 10 point, another additional 10 point on top of 40. But we've gapped up way, way too much. So I expect market to come down. So we've also reached the Asia 1, 2, 3, 4R. That right there. So it's a good place for bulls to actually pay themselves. Line chart is beautiful breakouts, and I mean, I wonder, we have a much bigger measured move to the upside, and we could. So they could buy the pullback again, but that could put us into a sideways and down to moving average. So since we have all these gaps, and they're not going to be all that easy to close, what I would look for in this case, the pullback target is once it starts to sell, So here is a pullback target, 55.25.50. We might even pull back to here eventually, but that could take a long time. So we could be doing this, and then the EMA comes around like this, and then the bulls buy again. Or is you can just measure the last leg, and here is your pullback targets: 29.25, 26.50. Excellent. Well, kind of missed it, but it's coming now. This is the last breakout point, so market is struggling there because bulls don't want to give up just yet. But look how many times we've pushed. So we might need to start to close some of the gaps, but it might take a while to do that. We might need to create some kind of a head and shoulders pattern. So it's not going to be very easy to sell, I think. So that we need to see some gaps closing. So there's a breakout test area. If we close below the 30.25, then we're going to come down and test these lows. And that is the 33% pullback of this leg. What bears need is another bear bar here. But I think the market is waiting for the Fed speech and the text that coming out for that speech. There will be Q&A. So the bears really need to come down and take out this breakout point. But there will be some buyers here, so we could end up going back up again. And if we make that double top, we could come back down more. So it's the first sell is never all that, successful. What about surprisingly big bear bars? Can we get those? Well, there's 1 p.m. catalyst, but I think market will try to go back up and test the highs once again. So bulls are buying the close of that bull bar because look where that body closed, right at the breakout. So anyone who was long above bar 40, buying to break even as well. So they're trying to get back to the close of 40, but you got 2 bear bars, probably sellers above 42. So it's difficult. So this is nothing but was a scalp, right? Not a swing into the moving average. However, we could still go sideways and down. We just need to let either the bulls break even and exit out, then more sellers would show up, or bulls are going to close another bull bar here and reach up to the 40 close or 40 high. We make a double top, maybe, we would need this up and then come down. But look at the early pullback area. So that's holding. As long as we stay above it, we're still bullish. But if we start to close below it, we're coming down to here. We might even come down to here. But when I see the bears failing to take out that green line, that's kind of a threshold. I don't believe market is becoming bearish, or the bulls are ready to exit out of their longs. They're still holding. But look at the profit taken at the 4R Asia range. It is very strong. So they're trying to keep this momentum still intact. So they're trying to fill that upper wick on the 15-minute chart with a bull body. But that means they have to go and test the 40 high, close a bull bar. Then yes, then the momentum is intact. We could keep going. In fact, look, we tested this target. Market could push into here. Okay. But we've been pushing way too much, and we have a gap here. We really need to pull back. So we might need to still stay sideways and up until 1:30 p.m. bar 48 and 50. Then we could start to come down if we can trap the bulls. So I don't expect quick selling here. anyone who bought above, because market just went sideways and then get a breakout bars. Anyone bought above it disappointed there, and they saw that the bears could not take out the breakout point with a bear close. They bought it. They bought the close of that 42, trying to get back up to the highs again. So I kind of understand the effort here, but is it good enough to make a new high? That you'll know if the bulls can actually close at and above the close of 40 body. So we might need to see a double top before we sell anything. Okay, look where the body closed. 43 is right at the high. So I said that we're probably going to test it, and we did. I like to see one more push and trap. So we could say 1, 2, 3 wedge top, and then come down. But these kind of double top creates pressure and a neckline, and we start to close bear bars. Like I said before, we're testing. This could be that truncated wedge also if this is lower than that. So I don't know where the 44 is going to close, but if it closes like this, bears can start to sell. Because this was a flag, and it could be the final flag. Look how many times we made flags. One is we moved above the EMA. Here's your flag. We came back. We didn't even touch the EMA. That's a flag. Here's a small flag. That's the third flag. Generally, fourth flag is the final flag. So, but we need to start to have another bear bar that would become the second sell. And then low 2 from the highs. Then we could get some traction down towards the EMA. Otherwise, we're just going to keep going up and up and up and up. Like, for example, here. Market comes down to the moving average. We didn't touch, they didn't touch, but finally we come down. But it puts us into a sideways and up trading range and then gets a final breakout. And we can stay above the EMA as long as we want, or we can, and then towards the end of the day we could just tag and then bounce and close above the EMA. But I think we're due to test that moving average. Here is finally test the moving average, more than 20 bars, gapping, and then bounces, makes a new high, comes back, double bottom, yet another breakout. What about markets start to sell very strong? Now, we don't have this, but that is the second sell. Well, it's very similar to what we have right now. But look what happened there. Stock bulls bought, right? But they couldn't close a bull bar. We have closed a bull bar. We're still bullish. So they start to exit out. They see profit taken finally, and market comes down. That's a leg 1, pull back, leg 2, pull back, leg 3. Then a double bottom underneath the EMA at the breakout point. Goes up, but that's not enough to reverse the market because you don't have multiple bars or consecutive bars closing above EMA. It ends up becoming a bear flag and comes down with a stronger leg. So then leg 1, leg 2, leg 3. That puts us in a trading range sideways market. You can't look for a reversal. So we need this to come all the way down to here. So we need some good bear closes. If that bar closes bearish, bears will get their second entry short. They already may have entered underneath 44, but a failure to close a bull bar, they will be in dire danger. They will be super disappointed. So there is this bar is young. There's 4 minutes and 5 seconds. It can still close bearish enough to sell more. but I don't like to sell without good confirmation. Yes, it's the second sell, but why? It's still early to say that it's not going to sell. So let's just wait. But I didn't sell. And that's why I didn't sell. I want to see confirmation. Such a bullish move. Remember, you cannot reverse the market. There's no point trying to go against something that is not ready to reverse. So you have to be patient. Let the market show you where it wants to go. Then you can take your trade. See, that's it. That's what I was looking for right there. And you could tell, again, I'm going to do the scan. Look, I measured the last leg. At that time, this was the high. And I said, that's the shallow pullback. We're probably going to test it. In order to come here, we need a bear body close below that green line. Anytime, that's because that's a breakout test generally. So if we don't close below it, that means that's a threshold that there's nothing bearish here. Most likely it's going to go, if it starts to close bull bar, it's going to go take the highs and make new high. See what I mean? So good luck. Many people don't measure, and then they think that this is going to sell and sell and sell. It won't work. So I did say that we need another push. So we have a wedge top now. Can we trap the bulls here finally? We might. Or market is going to keep going up and up and up until, like I said, bar 48 or 50. Then we might have a chance. And because this is a flag as well, okay? Flags are come in so many different shapes and forms, right? This is the traditional flag, right? So the flag can all the way, the channel can all the way come down and test, sometimes even lower the flagpole. Then you have the flat, which is a double bottom, is like that. And then you have this type, right? So you have this type, right? So it's going up and up and up, finally reversing back. And you might actually find buyers there, make a double bottom, and then go, if it goes up and cannot take out those highs, then you look for a reversal. The other one is this, and I believe it's this one. Expanding triangle. Like that. Tests, everybody else sells it, and then it just goes back up. So you have a spike pullback channel. Eventually market will come down and test this area. But when? I mean, I don't know. It's keep buying, so I can't really. What I can do is maybe I think that might be the target. Now, we do have a trend, and look at this breakout bar. That is quite large since bar 37. So we get this, and if we get failed follow through, then we're definitely going to come down, okay? But is this exhaustion here? I don't know. That bar, we're probably going to try to get follow through buying at least a little bit more. So you see, just don't go against a trend that is not ready to reverse. And learn to find those threshold points. And if those threshold points are not broken, market is just trying its best to trap you. But if you're smart enough to find those threshold points, which I put on the chart all the time with those colorful, lines, by now you should already figured out what I'm doing there. Then you can say, oh, listen, they're about to trap me. They're making it look like it's very bearish with 41 and 42. They're taking profits. It's going to come down. But it didn't do something it's supposed to do. That bar did not close below this level. I am not selling this. In fact, if I'm selling, I'm exiting, right? So that's the kind of thinking, because it's going to make a new high. So now this bar is same size as this bar and a much better bar, but because of its size and shape, probably wants to get follow through. Its target is 43.50 at this point. And then maybe follow through 47.75. Yeah, I mean, we could get there. Heck, we might even test 55.58 before coming down. I want to see either 2-bar reversals or some kind of exhaustion, reversal signal before I entertain selling. Yeah, and like Rick said something actually pretty logical there. You know, for reversals, you're testing the market. You got to start small. You can't just load it up because you're wrong, you're wrong. And market's job is to make us feel and look wrong all the time. Okay? That's why the streamers' jobs are very difficult, because we don't want to be wrong. When we're wrong, you know, we say the wrong thing or do the wrong thing, we lose first, and then you guys might end up losing. We never want to sound or look wrong, but there will be times the market make a liar out of me. Okay, and that's why we read both sides of the market. But something looks bullish, its markets are in inertia, it just wants to keep going up and up and up because it sees something on a higher time frame. Right, so it's trying to reach there. So don't reverse anything or don't load up if you're not 100% sure it is reversing back down. Something that this is exhaustion, so they started to take profit there, but you don't know how this bar is going to close. You start to sell now, that can trap you even more. But it is a profit-taking bar. Look the way it opened. It's right where 46 closed. So bulls are watching now, so they see more bear bars. They'll know that the bears will try to close this gap right here. So if 48 does not close bullish enough, or it doesn't take out the prior high to continue to up, then it's going to close bearish. Then they will exit out like a couple of points under. Because bears can look for, from underneath bar 47, about 5 points move down, which would bring the market to the starting point of this breakout gap bar. But closing a gap like that, that would be a sign reversal is in place. But we don't have enough information here, so. So here is consecutive buy climaxes. It's more of a small pullback bull trend, but you can see that even the pullback failed and we kept the gap open, and then towards the end of the day we finally got to pull back nicely. But look at this bar right here. That's what's happening right now. So it could get another leg up if it wants to. Right there. So we could have this and then up again, finally sideways, and another up again. Yeah. So I'm not in any rush selling anything. But we get a second bear bar. That means is we made a new high. That's a micro wedge, 1, 2, 3. Then we can start to come down. But that I need to see a pressure. That means we need to come down and test the 41 high. Bears try to sell there. They got trapped. So they're selling maybe like a 5-10 points above, and then trying to come back to the high of 41, 34.75, the price point. But I don't know. So this bar in 2 minutes and 15 seconds needs to close. If it closes bullish, there's no selling. If it closes bearish, then we know where they're trying to go. They're trying to come down and close the gap and test the 41 high. But I need another bear bar to do anything. So if you put a sell stop order underneath 47, you're looking for market to violate this gap bar and bring it down to here. You still have to scalp a little because it could still reverse back up. People still trying to reach the Globex measured move target. We're not so far away. It's only 3.5 points away. So nothing to sell here. And no one entered a short trade 1 tick underneath 47. So now that we're making possibly a new high, everyone's going to cancel that short. Okay. If we make a new high. But what about making a ledge here, ledge top? Well, as is, it's a 3 identical top. But I think we're just, oh yeah, we just made a new high. So there you go. It's still bullish. So we should get this target for the 350. I mean, heck, we might even get this 47.75. I mean, right? 43.50 is right there. And then, okay, we just got that. Next. 47.75. Oh my God. Yikes. All right, now we might be getting exhaustion. So now buckle up, everybody, because we are going to reverse soon. Now we should buckle up because it's getting is some kind of exhaustion now. Okay. We got a new wedge count with bar 46 resets. So now we're up, down, up again. Finally, we could come down. That's the one I want. Just another wedge. So there is that target. We're probably going to still get that 47.75. Don't get all too excited about selling here. Because I think bar 46 resets the count and gives us another opportunity of 3 pushes to the upside. All right. We got this beautiful. What about this? Sure. Why not? Let's go. I mean, I'm more interested in 47.75 and finally market coming down from there. So today's bar is perhaps coming down, or because that's the measured move of, oh no, that's not the measured move, but we could go higher. So that would be 63.50. Okay, I'll put it on the chart. 63.50 at 75. I mean, if really market wants to, fine by me. $64.50. Okay. And that is 64, so who knows? We could even get there. But I'm more interested in is 47.75 at this point. Or was it 75? 50. I mean, we will come down. I just don't know when. We just need to reach some targets, and the best target is coming from the daily chart. That's the measured move of mother bar that I measured there. So, and then the breakout bull target from the last week's range, which is right here. I don't normally measure like this, but whatever. I'll just keep it for the sake of those of you who don't like Fibonacci levels. I'll just keep the 133. So 1/3 of last week's range projected up. All right, so we met that target too. Now I have daily chart measured move, which is that blue line, which is 64.50. And then the Globex is, we could get there as well. Or just to be, you can also measure that halfway. If you want to be conservative, expect 54 test, give or take. Or, well, that's already done. I'm gonna leave it as is. See if we can get to that 64. I mean, at this point, why not? But we start to get upper wicks, bar 49, bar 50 now. This is 48 to 50. So this is 130. Now I'm looking for a reversal, everybody. Now I'm expecting some kind of a trap and a reversal. Okay, at least it can last 6 bars, or a swing 12 to 16 bars average, or 2 hours sideways and down, 22 to 24 bars, okay, reversal. But we need a good signal bar for it, maybe outside down bar, right, like an engulfing bear bar or something. That I would definitely sell, but I don't have that yet. But timing is great for bears to take advantage. Otherwise, we keep buying into bar 60. So the next 8 bars, next 9 bars, we could keep buying and buying, get to the 64, 64, 50 area. And then around bar 60, we start to sell. But I'm expecting some kind of a exhaustion. Except it's not there. So a little bit more to the upside here. Last week's range breakout target is 58.50 or 58.25 if you want to roll it down instead of roll it up, or measured move on the daily, which is this one, or measured move on the Globex. Yeah, there's no signal bar here, but we could finally start to see something. You need a good signal bar to sell one tick underneath. That's a VWAP. That's a daily VWAP. It's basically telling you market is bullish. You could hold it, and then the first touch you buy again. If we're underneath, you sell. Reversal, first touch, you sell again, like this. Similar thing, even in the Asia. We broke down strong, first pullback. You can look to sell and make money. But we start to get above it. They're going to try to buy the first touch, which they tried. But then they couldn't get a traction, and we moved under. So that means after a leg or two sell. First pullback, you should also sell at that level once again. I'm not fading anything here. I need the signal bar. Now, those looking for a backdoor to enter into a short trade, expecting 10 bars, 2 legs to the EMA, are positioned their sell orders underneath a very strong pull close, which is bar 50. They can get filled there and maybe able to make money, but I don't like to sell underneath bars. So when this bar closes bearish enough but fails to take out the enter the sellers one tick underneath bar 50, I'm going to move that stop order one tick underneath a bear bar. So this bar closing like this would be a really good sell signal bar, in my opinion, but only if it closes that way. So otherwise, backdoor bears waiting one tick underneath bar 50. Look at this. It's up and up and up and up and up and up, and then it does this and then goes back up again, right? So we closed it right at the EMA. But I think it's trying to become that outside down bar that I've been talking about. So, okay. Let's see if they can. Now, those sell stop orders moved underneath bar 51. So now they have a better signal bar to sell one tick under, but they will cancel out if this bar now, closes really strongly bullish. That's why entering with stop order is a lot safer than entering with market or limit orders. Because if market is not ready to go your way, it's just not going to fill you into the trade. Okay, enter you into the trade. So that means you can exit out, or you can cancel out the trade that never been losing, and think the other way. But bears see a exhaustion here and a good sell signal bar. They've already positioned themselves one tick underneath 51. So they're looking for at least 2.25 or 5-point sell into one of the moving averages. You can also use a 10 EMA as a pullback. EMA is above 20 EMA, therefore the market is still very, very bullish. Right? They could buy the pullbacks. But we could actually pull in between 10 and 20 this time around before finding any buyers. So that could create that 5-point pullback from under bar 51. But we don't know. We'll see. First, those sellers need to be triggered into the trade. We don't need this anymore, but here is a trading range breakout. That's the second target. Market could get up to here. That's the measured move target of this entire trading range. So if nobody enters into a sell order here and the market doesn't reverse back, we might actually keep going higher. Or we come down and then go back up, but we need to close bull bars above 166 to get up to here. You see why this area is still an area of interest for bulls? They can certainly get us there. But bears want at least a 6 bars to downside. So here's the first bar, possibly second bar, third, fourth, fifth, sixth, and then this swing fails and bulls can take over. Anyone? Some sellers probably above. Disappointed. They might have sold a close of 51. This is why I don't sell a close. I put it one tick under. Because God forbid, if the market still wants to continue to up, I can cancel that sell order and don't have to worry about anything. It's still a bull market. Bulls are still holding. They want higher prices. Market obviously agreed that right around here with this failure and breaking these highs, that this is too low. Okay, so they want to mark it up. But how much can they mark it up? They can mark up, let's see. So from here to here is about 60. It can go up to 80 points before taking profit. So I think that's where the market is trying to go. So we could reach there. Don't be all surprised about it. Sometimes you could get very rare, but you get you get 340 points. 340 points days are super volatile days, and it's a sell from the open, okay? Or some kind of a news, but and you get really big bars, and you know those days. Everybody lose their account. You know those days, right? So it's just sell for any reason kind of day. You can get 3 sets of 40 points, but in a day like this, you might get 2 sets of 40 points. So. But I want to test something. Okay. What about here? No. What about here? No. So we're intact. So we could get that 40 point, additional 40 point. Yikes. Go Bulls. Oh gosh. Beautiful. Bulls trying to close about 166, so 2 times the projected 2 quarters of this trading range, couple of days worth of trading range projected up. So they're trying to close above it so they can get up to the measured move target. Nothing's overbought yet. Okay. I'm also looking at on Thinkorswim. I have it open. I have this indicator I use on Thinkorswim, which is slow RSI, and it's in the buy zone, and it's flat. As long as it stays there, every pullback is going to be bought. It is rather parabolic, climactic. It's not really, it was climactic here, maybe here, but it's now parabolic. So we are going to pull back, but I'm not ready to be the first to sell here. So I don't want to be that first person. Market probably wants to come down and test the bar 51 lows, but we need bear bars, consecutive bear bars. Very difficult. They're buying every pullback. Last breakout point was 49.75, so they want to mark it up 4 points above, so they want to get to 53.75, but we have gapped up a lot. But you can see how steady this has been going. So the bulls who bought the pullback to the last breakout point at 49.75, ATR is 4 points, so they want about 53.75. I want to see surprising the big bear bars and strong bars closing on their lows before I even consider selling. I don't know. Let me check before I even consider selling. I don't know. Let me check. Slow RSI is, hold on. So the settings are EMA length is 6, RSI length is 14. It's out of the box. Overbought is 85. Oversold is 15. That's it. Days like these, slow RSI is amazing. It just keeps you, it's basically my always in long indicator. That's the only indicator I love after using ATR. So that's the only one that I pay attention to. But once in a while, I look at it because I know what the market is doing. It's just I don't need to keep looking at it. But days like this is, as long as it's in the buy zone, is above the 85% line, right? Is people say that that's overbought. There's no such thing overbought. That basically it's telling you I'm going to sit here and stay flat. As long as I'm in this zone and you see pullback bars like 41, 42, is 51, 37, whatever, you can buy underneath those bars. You can buy the close of those bars. You can just scale in, is because I'm still always in long. So that's what's basically telling me. It's perfect for days like this. If you can't figure out what always in long, we have been always in long. As soon as we got above and took out the bar 4 high, and then the first pullback they will buy and more now breakouts. So now basically you're measuring for measure move target. So scalpers, ATR was 4. It's now down to 351. Breakout point was 49.75. 3 points is 52.75. Add 2 more ticks, so it's 53.25. So I just round it to 53. So we might actually still get to 53. So I just did the math, and it's telling me market wants to tag 55.53. Booyah. That's 55.53. We just tagged it. And that's with the math I just did. And their machines are calculated, and they just took profit right there. Or taking. Doesn't mean it has to stop here. It could keep go up and up and up. That's just one time the ATR. That's a scalp. You could do a lot better than that if you want to. But once I get one time the ATR, I'm scalping. Because it's basically the market's telling you, I calculated this, and this is where we are going to take profit. It's up to you to take profit. You can't take profit and leave a runner. So basically, it's a very inclined small pullback bull trend with breakout bars, right? So it just keeps going. You know where it's going. It's trying to go up to that, or that as early as 58.50, we could get finally a reversal. Or daily bar is still trying to reach the measured move target, which is not so far away. I mean, at this point, this beauty is, this is great. All right, so I'm going to take a quick break. I think I'm going to have to get some doping here, which is coffee. And there's nobody to make coffee for me, so I'm just going to put something on the stove and be right back as this is going up, okay? I have been long, again. Be right back. Because if I don't make the coffee next 2 hours, you're just going to hear a bunch of gibberish from me. I'll be right back. So we're heading towards my Globex measured move right there, 55.64. We're testing the breakout trading range breakout target from last week's range. Also, the daily measured move is right around the corner. So at this point, I think you should just hold it. So I don't think the L would, I don't know if this person is hearing me, NMC19. I don't think the L would exit out. Which bar did you say? I don't know which bar I was talking about, but I'm guessing like these. He wouldn't, because the breakout test area held, and 2 or 3 ticks below that bear bar, bulls put a stop, and then they went long again. The bar is next bar actually by the close of this bear bar, right? So, what bar is that? So I think that's like 40. Yeah, bar 42 close. Bought by the bulls with the stop couple of ticks under, maybe 2, 3 ticks under, and then you're going long again. That is a really good risk versus reward. So so yeah, I mean, I don't think he would exit. There's nothing there. That acted as a support breakout test area, and the market is still going. I'm looking for exhaustion, and that generally forms with strong upper wicks. We got one on the 55, and we're probably going to get it on the 56. But if this 56 does not get that upper wick, then there's nothing to do here. It's just breakout. It's just keep buying. This is going to go test 64.50 or 64. 64.50 is the measured move target from daily, and it's also the measured move of this range projected up. Is right there, and that's 65.25 or 65.50. So we're very close. There's no need to exit unless you see a surprisingly big bear bar closing on its low and trapping everybody. Since there's no catalyst, market will eventually reverse soon. Maybe next bar, next 2 bars, next 3 bars, I don't know. I just need the signs first. Targets are one thing, but you know, market does what it does. I'm looking for 2 sets of 40 points up because it's that kind of a day. And heck, we could even go to 55.70 today. I think this is what we have today, which I showed you earlier. And we're going to keep going up and up and up. At the end of the day, we might actually come back and close at or below the EMA. Oh, there you go. So you heard me. Okay, great. Is that what you were saying and I just confirmed it anyway? I thought you were asking a question. I'm sorry if you were making a statement there about L. Sorry. All right, we're on the same page now. This is why this lack of coffee. my caffeine levels are just like next to nothing in my bloodstream. So just waiting for the machine to finish brewing. And I'll be guzzling it like there's no tomorrow. Really. And they're trying to shake everybody out now. It's like, oh, let's just make it sound like and look like a really bad bear bar. Let everybody sell and let everybody exit, and then we just keep going up. We're so close to the daily measured moving. We're so close. Well, we met that target. That's one of the reasons we're getting on the hourly. Look where we are. We just reached my target, right? So this yellow is last week's. This isn't fixing itself, but eventually it will want. So Monday, Tuesday, Wednesday, Thursday, Friday, Monday. So we reached that target. That's some profit taking is happening right now with that bar on the 5-minute and an upper wick, but it could keep going. The higher time frame has a target. Now, if you see an outside down bar, that you might need to exit underneath, is because that can get follow through selling. So that means this bar needs to go and take out the 56 low. But like I said, if you sell right now, they could trap you because I think until bar 60, we're going to keep buying. And around bar 60, we might sell. So remember I said that earlier? If we don't sell right now, bar 51 did not get a follow-through bear bar. I said sellers could be underneath bar 51, but nothing got triggered into short, and then we went out and took its high. So those bears will exit out, and they will instead buy. They will put a buy order above 53. They will buy the pullback. So no one's ready to sell anything. Therefore, that could get us to bar 60, and then we could start to descend. Yeah, I can't do without coffee. I think I have proved that with several times I try to quit. So what was I thinking? Stupid. I don't know if it's going to be spot on, Rick, because this is still trying to become an outside down bar. If it's an outside down bar and closes really strong, then you should definitely exit under. You can buy the next breakout bar again if you're interested, but it's just this bar becomes an outside down bar. Bulls will buy again because they're stuck up there above 56 and they're going to try to break even, but we could suddenly get a give up bar and every other bulls start to accelerate the profit taken exit. Then the other sideline bears watching the market will jump in. So what they're looking for is a signal bar. That's a signal and trigger. And they're looking for another follow-through bar and waiting for every bull to exit out of the market. That's becoming a surprise in the big bar now. Okay? So surprising bars get follow-through. I don't know. This bar hasn't really closed. There's 9 seconds, but as is, it's an outside down bar. Some buyers are here waiting. So stock bulls will buy and try to bring it up to one tick underneath this bar, probably. I don't know if they're going to be able to succeed, but they might bring the market to 54.75, 54.50, and then exit out, and then more bears could come in. But this is a surprisingly big bar now. But the bulls don't give up that easily. They want to get a break even. So you are a bull stuck up here. Maybe you bought. Buy the close of 57. Where is your break even? Right there. That blue dashed line is your break even average. But if that's good enough for them, they're going to try to get there. And if we cannot close above it, one tick above a bull body, they're going to exit and then more bears will come in. But I don't know. In order for me to sell, I need to see other bears coming in the market. This is a shake you out and freak you out bar. Only it can actually go back up again. So when I see a bar like this, okay, I can exit underneath, but I don't sell. Okay, if I'm bull, I will take profit, but I'm not going to sell because it could go right back up again. So I watch how are the bulls still were making money bought again above 56 will behave. If their behavior does not show me that they have strength to close above the average break even, then yes, I will look for other bears to jump in the market and I will sell with them. But right here, right now, if the bulls start to close above the stash line, that means they can bring market back up to the close or one tick above 56, you know? And then next thing you know, everybody's crying. But that puts us in a trading range, that bar 57. Look how big it is. And it's an outside down bar. And there were sellers one tick underneath entered, or maybe they sold close, but you're selling so close to the moving average. So now what? Well, they're pissed off, so they're like, okay, we got to sell. So they're hoping maybe the 50% pullback of the bar or upper third. Remember, I gave examples on Friday. The upper third of the SPAR, there are sellers waiting because they want to break even. So, but I think we're due for a pullback. Eventually, I think we will pull back to 55, 45, 55, 42 area. I need to see bulls exiting out of the market. So leg one, bears one, leg two. You can see bulls fail to close above that dash line. But they brought the market so close to an average break even. If this bar closes bearish, that means those bulls exiting out of the market, we could get leg two, leg three towards the EMA, blue line. But only if we close a bear bar here. Otherwise, we might need to go and test the upper third of the bar before selling again. So it's still not clear, right, for bears. Just because we have a strong bar, it only puts us into a trading range. It puts us into a trading range. But I expect bears to have a small leg down. At least maybe come down to 48.25, 47.75, or 47.50s before bouncing again. Still not clear for bears, very difficult to sell. But we have tested the 56 lows. So what is it that bulls trying to do here? I mean, they've already come to that. So we need bears to step up. We'll pull back into this line. I don't know when, but with the second or the third leg down, it is possible. Or even they're going to try to break this line. If we break this line, then we're going to come down to here. Yeah, They have to break this line. If they cannot break this line, then there is nothing bearish here. So there could be sellers. This is 3 inside up. It could be a 3 inside up failure. Could create a small head and shoulders, left shoulder, head, and right shoulder. So look for right here a failure. If bulls cannot close bull bars above this price point, they're not going to go higher. But if they start to close bull bars, then we're going to make a new high. And then the targets are above 80 point. This right here, 64.50, 200%, which is measured move. So in order for any kind of head and shoulders reversal to be invalidated, bulls need to violate the left shoulder high with a bull close. Okay, so we're testing now. That's a 3 inside up. If we get the 3 inside up failure, we could get a second leg starting up here. Sometimes second legs show up right at the prior highs. Bulls fail to take out sometimes they do take out the high with a wick, but cannot close a bull body above this prior high, and the second leg starts all the way up. But those bears are stuck underneath 57. So some machines, smart machines and quick thinking machines, they sold at the 50% automatically and exited out, but others did not. So they utilized the upper third of this big bear bar. That's because you're going sideways, a limit order market. So what they need to do is they're already started to sell. We hit a sell order, block of sell orders. So now if it's strong enough, then they would close this bar below the left shoulder. And not able to close above left shoulder high, market can end up coming down. But we'll see. So you can see that they are hitting a block of limit sell here. But is it strong enough to bring the market down, back down one tick under, or to close of 57? That's the question. Look what happened to the inside up. It failed. And then market pulled back and then become bullish. I don't know if we're going to get this. As long as we don't also take out the outside down bars highs, market can still sell. So we still don't have that bull bar closing above 55, 57. But it is consolidating at the moment. So this is consolidation. Bulls trying to invalidate the head and shoulders pattern and keep going higher. So they're trying to close this bar above 55, 57. But if they fail, we get a bear close here, we can pull back down to this area. And bears will not sell if they don't see this trend line break first. But if they see it, then we could pull back to here. So you now have 3 bars up within the range of 57. Bulls disappointed, they bought, and there's a negative gap here. They're trying to keep it open so they can keep going higher. They can keep going higher. But eventually we need to close this gap. And we close that gap, we're going to come down either the EMA or this trend line. So EMA is at 46, 55, 46. So bears looking for a bear bar here. Some sold with limit orders at the upper third of the 57 range. Other retailers are looking for a bear close. Then they will measure their break-even average price. It could be a doji, it could be a one-tick body, one-tick bear body, or a better signal like this one, 61, bar 61. So those are L's, 10 and 20 EMAs. You don't need them, but if you're looking for in a trend like this, it acts as support, and that's is basically a pullback. Okay, at and around it, bulls are waiting to buy every pullback. 4 inside bars, okay, inside of this bear bars range, and it's violated. So I don't trust the bears anymore. They're desperate now. They're desperate to bring it halfway down at least. But bulls violated the possible head and shoulders here. So basically, this is like bulls reloading to go higher. But that's still inside trading and not a breakout from the open or the high of this bear bar 57. Bears are still desperate. They want to bring market down. They need a bear body to sell one tick under or the close to get the average. It's a trading range, so we're at the top of the trading range. These bulls bought probably scalping, and bears sold probably selling again, want this trading range midpoint to be tested. But so they got a bear bar here, but it's not closed yet, so there's still 56 seconds. But if it closes really nicely bearish, I'm going to try to measure where is that possible break even, but the market could come down to the 57 close. No one is going to sell if it's not a good bear bar closing on its mid-level at the minimum. All right. The break even for bears is at 53.50. So if you measure, they're desperate that they want to bring market down to here before it goes back up again. But bulls did close above the possible left shoulder if that's what they were seeing. It's really bad. I don't like these kind of patterns when they're not really obvious looking, right? If they're not obvious looking, I mean, machines are looking for these patterns. So if they don't see it, I see it, but it just doesn't mean that it is a head and shoulders pattern. And it's invalidated anyway, so you can see how desperate the bears are. But they didn't close a really good bear bar here. Bar 62 is not all that strong, but they did sell the close of the bar anyway, so that means you can see the desperate bears want at least half of this bear bar's range tested. Are they going to get it? That's the question. They should. I mean, they waited so long for bulls to bring the market up to the upper third. It is a trading range. So it'd be better if we can actually come down and test the midpoint of the trading range. But not a good bar, 62. Probably buyers want tick above because it's high. High 1, basically it's high 2 above 62. So probably buy orders above that. So the bulls are trying to buy and get a breakout to the prior high. But I'm going to wait. I'm going to wait for bears to try to get a relief here, at least get closer. If they cannot close below the 33, it's 33.25. their target. If they cannot get to the 33.25, then we're going to go higher. But they should at least tag it. That's only fair. What the heck is going on? Is some kind of a news came out? That's bar 63. Something is happening there. Okay, market decided to do something. Some institution just entered. Did you guys see what just happened there? Come on, bears, you could do it. Just get down to this 53.50, 53.25. Yeah, that could be it. Definitely. That means we could actually end up coming down to the close of 57, but I don't know. This is just, I need to see another bear bar closing, and this time bears to just finish their objective. Bulls trying to trap the bears and squeeze them out so they can go to prior high, 57 high. They see high 2 here, now that they moved underneath 62. But look, they already tested 62 high, 1 tick above. So they might have also trapped the bulls buying there. So if this is bear's way of squeezing bulls out, then we're definitely going to test the 53.25. It's just taking its sweet time. Come on. I just tested already. I don't know what else to say. Go on now. Just tested already. I don't know what else to say. Go on now. My coffee's sitting there and waiting. It's getting old. I haven't even tasted it yet. I just want to go get coffee. And that's it right there. Beautiful work by bears. Now the question is, can they actually bring market down all the way down to close or 1 tick below 57? That's the question. Well, there's your shakeout right there. There's shakeout every other bar, believe me. It's just that these, this is an inside up reversal. So bulls failed there. So the bears stuck underneath 57, they're getting it. So this is great. I actually ended up selling underneath 53, and I'm looking for bar 57 close tested. That'll be a very handsome reward for me. I say that, and the bar just stops in the middle of it. It's like, it almost feels like it heard me or something. It's like, if she says so, let me scare the heck out of her. So, I'm just waiting. Oh, it kicked me out. All right, so my runner didn't work out. I did scalp, but I was really hoping follow through, and then it just came in and hit my break-even stop. Okay. That's fine. It was a good trade. It was okay trade. Wasn't a big deal. They couldn't really finish the job, but then again, there's still 57 seconds. This bar can still collapse and close bearish. I'm going to grab that coffee. Be right back in 2 minutes. Okay, so bear's still trying. This time it was difficult, but that's still sideways and down. That puts us in a trading range, highs, lows. So I did kind of expect it. It did kick me out, and I didn't feel like entering again. But there it is. They're about to test. So let's see if they can finish the job. We're so close to the EMA. I like to see a test of the EMA. Market to move down and test it this time and tag it. There will be buyers probably there. We're right at the apex of the triangle. But look what the bears did. They did break this trend line. So they can bring markets down to moving average and then also to this trend line. So this is my projected target for bears. Could still be head and shoulders, although it's invalidated, but we only have one bar is closed above that trend, the price point, which was 55.57. So I think we are due for testing the moving average. There are buyers at and below, most likely. I think we are due for testing the moving average. There are buyers at and below, most likely. Bears couldn't finish the job. They still have to test the 50.25 at the minimum for true break even, or one tick below. That's 49.75, which is EMA. Breakout bar 53, so lower third of bar 53 is a buy zone, and buyers could be there somewhere here all the way to the low of 54. Bulls trying to prevent a 9 or 10 point tagging here by bears so that they can continue to go up to their targets, and they could do that, but the moment the bears get their 10 point, 9 point is 49.50, then there are also skunk stops here. I'm not sure if they can actually get up here if we actually get that 9 or 10 point. 10 point is 48.50, but failure to tag 49.50 or 48.50, then bulls were is continue going up into the close. Strong bull days like this, you cannot expect a sudden reversals. It has to go into some kind of a trading range and give you several legs before before breaking out again. Bulls still see targets. Daily has a measured move target above, but bears haven't really gotten a chance to break even fully. Either 57 closed or one tick underneath 57. So 49.75 is still their target. 49.75 is one tick above 9 points. If we just test the 49.75 and then reverse sharply, bulls will have a chance to bring market back up again. But the moment we test 49.50, then that chance is reduced. So that probability to go up again strongly will be reduced. Tomorrow is going to be Tim Fairweather and Brad Wolf. 19 market is closed, Juneteenth, and we're not going to have a trade room commentary. Trade room will be closed. On the 20th, Tim Stout comes in the morning, and I come in the afternoon. And then Al Brooks and Brad Wolf come in on Friday, the 21st, and they close the week for us. And I come back on the 24th morning. Probably sellers underneath bar 67, and they entered because 68 went one tick below. But it's a trading range. Triangles are trading ranges, whether they're contracting or expanding. You're kind of at the bottom of a trading range. Not to mention contracting triangles, so you're right at the apex. It's small trading range, tight trading range also. So probably sellers above. And the bears still really finished the job here. We'll see high one. That's not a good high two, but this is. And then they see high 3. So they're trying to buy here and swing it back up. But those who sold underneath 67 now stuck, and they see a tight trading range, so they want to sell up here. It's a small trading range within a trading range. If they're stuck still and they could sell even higher. So, okay, so we have a breakout now from this triangle. What happened there? Bears failed. Bears having a hard time is bringing market to finish the job here. So now what are the bulls doing? They're trying to go right back to where they were going before. So but it's the first breakout. What do you need here? Well, you need this bull bar to close super strong, okay? Almost with no upper wick, okay? Even if it's a one tick is fine, but if there's no upper wick and it closes really strong, bulls can buy the close of that bar and target this inner highs and the prior highs. But you start to get upper wicks, that will be a failed breakout, possibly, because bears are stuck underneath 67, and they see that market closed below EMA, so they sold. Notice the trap right there. 68 trapped them. So what do you think they're going to do is, in a tight trading range, they're going to sell above bars, hoping to bring it back to the 67 lows. So that makes it dangerous. At least you want to see a bull bar if you want to go long again. Bulls trying to prevent the minimum 9-point test is so that they can actually resume the trend back up. What about the bulls bought and invalidate this, and they were looking for going up and testing the prior high here? They scaled in lower, and because they see a trading range, so they buy at the lows, and they trap the bears. So you know they're trying to get back up to here where they got stuck. So this bar closes like this, many bulls will buy. So it is a flag, trying to test the highs and get a breakout. Target is here, 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 and daily here. I don't like this trading range, so I'm staying out of it. And there's no point of selling here too late. Anyway, really good job. You can see how they bought the close, even though it came down a little bit towards the moving average, but they bought the close. So market is now testing the prior highs. It's trying to reach the targets. I did buy, and I took profit, scalped closer to the highs, bought above the 69, and I'm looking for follow through for my runner. See if we can get above 55.61 here. But I did pay myself pretty nicely here. I just want to see more from the bulls. Okay, so that was the flag breakout. Not breakout, but really reversal breakout. Can only happen if we take out the prior high. What about we make a double top and well, in order for us to sell, we have to first trap the bulls, right? That's not going to happen here. It has to happen higher, above 57, bar 57. So bears couldn't finish the job. They exited out of the market. That squeezed them out of the market. Therefore, you got this beautiful triangle squeeze. And your first sign that they weren't going to meet their target or objective was bar 68, trapping them. So you could have bought as early as 68 high or close even. I bought it above 69. I wanted to see one more bar and a breakout. That was the triangle breakout and a really decent close. And I also bought, I bought the close and I bought one tick above. So I had multiple contracts and I scalped here. I'm holding a runner. I want to see bulls succeed here, but I don't know if I'm going to get it. So I need to see is bulls do better here. We were so close to the daily measured move, 64.25 or 64. I think it's 64.25. I'm going to mark 25. I did mark 50, but let me see. Okay, 64.50. Back to where it was. Bears trying to trap it inside the trading range. It's top of the trading range, right? So they're always sellers, but it's kind of difficult. I think the bulls are going to get their breakout. We're so close to my, I mean, there are a ton of measured move targets here, including the double decker. I call this a double decker. 80 points. So it's like two trends, 40-point trends, 80 points. So it's like two trends, 40-point trends. There's still time in the market to reach any of these targets, but I'm more interested in the 64.50. But this hour needs to close above 58.50 first. Well, it looks like it did, although we're still in it. So it's trying to get another bull bar as confirmation so they can just accelerate up. That's a good follow through bar, 71. So bulls are still trying to reach is further up. They haven't really let go. I think we need to trap the bulls before we sell anything. So we might actually tag 61.50, 63.50, maybe even 65 is before coming down. So my targets are above anyway. Or 65.50 is even doable, but it just needs to accelerate. There's a bunch of sideways bars here, and a bull bar is and a bunch of sideways, so that's kind of a consolidation here. They could buy that if they think that this is a pullback, and then they see targets above. So I'm looking for a weak bear bar or last minute bull close. We have only 15 seconds left. So if the bulls want to take over, now is the time to do so, and don't allow a bear bar closing is below its midpoint. If they can manage to do that, then we're going to get a breakout. We're going to test above the 60. Well, that's not good. So they did close a strong bear bar here. Yeah, that's definitely not good for the bulls. They should not have allowed that happening. So now market is trying to come down. So that's not good at all. So now they see a double top neckline and they want to bring it back down to EMA. Well, it's kind of due, but at this point, I don't know what they're going to do here. It's trading range. So it's the end of the day. It's bar 74. Bulls can still break out and get their targets, but bears want to bring market down to EMA and to that trend line. This trend line is still target. We could reach 52. I think this trend line is magnet for bears, but it's the end of the day trading. There are still bull targets. The upside market could still break out to the upside. could get that 5-point, but needs to close a bear bar here. Okay, so it did close a bear bar. Institutions will enter the market with the close of bar 76, okay? It can break out. It can break out to upside. Bears want their 5-point. So that's, I think, 53. And the pullback, this trend line is the target, slightly underneath moving average. We're due for moving average test, but there could be buyers right at the moving average waiting. First touch, we could find buyers there. That's a second entry short. Bears trying to bring it down to moving average. 5 points right there. Maybe they could get a 5 points out of this from underneath this doji. First sell, second sell, so it's second leg down because bar 75 went above the prior bar's high. It's trying to extend down. I don't know if they're going to be able to do it, but it would be nice if they can. Just accelerate down and at least tag the EMA, and that's the EMA test. It's already found buyers there. But 3 bear bars, sideways, pull back, and down. I want to see 5 points out of this. I want bears to make 5 points out of this. So I want them to actually bring it down to 53. All right, so we did get that 5 points as expected. And then I'm now looking. Okay, so we got that too. Yes. All right, I did sell. Scalped at the EMA a little bit and then held into this scalp there. So good job by bears. What about this is support here, by the way. Right here is we could test and we could bounce from there. Bars could be in that green area. It could be also like this. What about these targets? We could still get there, but we have to trap the bears right around here, maybe right here. But at this point, I'm not going to trade the rest of the day. I have no interest in trading. I'm done at this point because institutions will enter with the close of bar 76. And I'm not all that thrilled because bears already made a 10-point here. They got a 10-point, I believe, from the upper pivot. Yeah, they got a 10-point. They can even accelerate down a little bit more. I just don't want to trade this. It's trading range at the moment. It could reverse. It could continue to sell, but I think there are buyers here. End of the day trading is not for me. I prefer to watch it. But there are still the targets above. I'm not sure if they're going to be able to make it there. As long as that trend line holds, that's it. But if they close a bear bar below that trend line, then we're going to keep selling into this green area. We're going to keep selling into this green area. $55.49 is their target and slightly lower. Bulls could not get a breakout here, and I started to look at things. Okay, bar 71 is really nice, but what's up with 72? It's just not doing what it's supposed to do. Then we get a bear bar, I'm done. So I started to sell, and I look for a second sideways and second leg down, and that's the second leg. And now we have a gap down bar. See, this is good for the bears, but this is support here. So we could reverse. This is bar 77, 77, 78, 79, 80. We could reverse back up again. There could be buyers and we could close strong again. We could get up to my targets. It just needs to find a couple of institutions investing in a long trade or buying this pullback. But you got a bar close below the moving average, and the second bear bar means it is always in short. But how come it's always in short, right? It's just such a strong day. Can the market actually pull back? Let's take a look. So here is today's range. Pullback target is here. But this is support. I don't like selling into support. I like to take profit before the support is and move out of the way before the institutions start to do some things that I cannot handle. So we tested my support. That's 2 legs down. Okay, bar 75 separated that 2 leg. That was a pullback and second leg. Yeah, at this point, it's anyone's guess. And for bears, they can definitely bring market down further into the pullback. This is the 33%. I know there's a ton of things here. Let me put. That's a 33% pullback. Okay. And that's a 50% pullback. Get rid of that. No bull bar. It's still extending down, but still in the support. That's there's a threshold line, which I didn't really mark, but it's right here. We just tested that. You see that threshold? If that holds, bulls can still show up here. But you have, this is the second bar below 20 EMA. If they close a bear bar below the 55.46, then they can sell into 37.50. But I don't know at this point. It's also a manipulation area, 45, 55, 45. We might need to test it before it's bouncing. All right, institutions are entering. You can see how fast that bar is forming. They're trying to tag the 55.45. There could be a bounce here at the 55.45. But if the 78 closes as a bear body, then they're going to continue selling into possibly to 37.50. But I look for a bounce at these levels. Now, what are these levels? Is on S&P only. All right, I'm going to talk about this. I've talked about this many times, but it's a floor trader's method. Floor trader's method is basically a couple of floor traders explained to me back in the day. It's the way that they move the market, or they not really move the market, because they can't. Nobody can move the market. It's just big orders. So many orders they can't move like that. But they get together, and what they were doing before was to bounce the market. So they all the floor traders had an agreement, and they knew exactly where to bounce S&P. Okay, and that's every price point ends with 5. So if it's coming from above about 4 or 5 points, it's going to bounce at 55.45. It's coming from down below to the manipulation area. It's going to bounce to the downside, so it's going to sell. In this case, it's coming from above, right? 55.45, and it's bouncing to the upside. So what they do is they put huge orders here. It moves up and they make money. If it breaks below it without bouncing, they found the average price, which is say this is 55.45, right? Okay, so market is coming down about 5 points or so, maybe 4 points, doesn't matter, 4 or 5. This is 5, not 3. Comes in here. It could do two things. One, it could bounce right there, maybe one tick above or right there. Bounces, closes a bull bar, it could get another bull bar bounce, right? It might even buy the next one. The second one, it comes in with such velocity and breaks it, right? So it's a bear bar, broke like that, opened up maybe there, came down here, broke like this, right? And then made this. So what you do is, from that price point to the low of that, you measure it. You find a 50% and you put a buy order right there. Because it was supposed to, your buy order is supposed to be right here. It bounced, you made money. Because it breached it, anybody who bought here disappointed those institutions or the floor traders. They're going to now look for an average price and buy it, and then they're going to take profit as soon as it gets up there. They might hold a runner, okay, look for, but that's about it. So that's how you trade it. So look what's happening here. Here is 45. We just test the 45. We bounced eventually, but it's not closing a bull bar yet. So if it closes a bull bar, they're going to be even making more money. But it is bouncing, so it's doing its job. I call them pit stops. So that's where I don't care how market is bullish or bearish. I can literally trade all day long with those levels, all day long, right? So it comes in, it bounces. If it closes below after the bounce, I look for a retest and I sell about 5 points. Why 5 points? Because that's S&P's average, its deviation, right? So 5 point deviation. 10 point is a swing, 5 point is a scalp. Hence, or hint, right? That's what L says all the time, 5 point swing, 5 point scalp. So then it could bounce there, but if it breaks below, you know where we're going. I'm going to buy there. It's probably going to go up there. I'm going to take profit there. Comes down, breaks, I'm going to keep selling, right? Say it goes up, I take profit and close above it, and then pulls back and buys. It goes back to this, that was say 55.45. Now I have a sell order waiting there with bunch of contracts. I sell the bounce and I scalp. I don't expect 5 points, but a couple of points I scalp and leave a runner into that 5 point deviation. So I don't need any of this. I can literally mark my levels and trade that all day long and make I don't care what the market conditions are. I don't care what the price action is. It's called floor traders method. And those floor traders are now hedge fund owners, okay? So imagine, if market is still doing this, that means they have programmed machines trading with this in mind. So what you can do, open up a chart and add, like tonight, practice it. Put a bunch of 10 different lines, right? It's 45, 35, 25, okay? Make it black, very thick black, maybe 3 points. And then in between, put dash lines, but make it white and thinner, right? That's going to be 5 plus 5 points above that level, or minus 5 points below that level. So if it was 45, that's 40, 35. Make it a thinner, but dash white, okay? This one's white, this one's black. And then watch the behavior. Goes up, comes down, gets above, you can buy. Put a sell order, sell, a couple of points, scalp. If it comes here, breaks below, you keep selling into here. Take profit, bounces, you have a buy order there, you take profit there, and then you buy. You were short into it, now you're buying into it. Take profit. It could come back down here. If it doesn't close below, it's going to bounce again and go up there. So on so. Test it out. You're going to love it. It's actually pretty cool. All right, market is over, finished. Let me check something here real quick, and I'm gonna do the end of day. Still coming down. Unfortunately, it really didn't close a bear bar, but it is trying to pull back to 33%. So I guess that's a 33% pullback. That's where it's trying to go. But the only problem here is that there's no time left in the market, and there's no bear bar close below the threshold line, which is 55.46. It could suddenly can reverse back up. So there's no point of trading this, but you have always in short 2 bars, 76 and 77 close below the moving average. So it's obvious that it's trying to come down here. Okay, I'll be right back in half a minute. Okay, I opened the question box. If you guys are interested, you can also post a couple of questions. I'll take a few, but I'm going to go through the bar by bar. So okay, if you look at the yesterday's price action, is Friday's price action. It started to buy. It had a double bottom, so that's a major trend reversal. You know, if you squeeze things a little bit, you got a huge gap up. Market has been bullish. That's a cup handle breakouts. It's going sideways, trapped everybody, right? So you have 1, 2, 3 wedge bottom, nested wedge bottoms, goes up, cannot take out the highs, comes back down, right? I did say, I don't know if you guys remember it, but that selling was strong. We're probably going to test the lows. And then we had a double bottom that day, and then we started to reverse. So but overall that day, Friday, we were actually bullish. This is bullish market, believe it or not. It's trying to rotate back up. So there's a trading range here. It wants to test this trading range highs. So you have a bunch of cups here. Here's a cup, right? And here is finally a handle. It's rather shallow, but it is there. So today in the morning, we have made that pullback, okay? I see this as a rounded bottom. So here's the pullback, right? But it's a trading range. What happens at trading range, right? It's a limit order market. You can mark these levels, right? Maybe even here as early, but we didn't have to do that. Bar 1 created that is low. There are buyers waiting underneath there. There are buyers waiting there. There are buyers waiting there. Buyers are waiting. They want to buy. So, but other than that, you can also find a level. Look at this. You have a breakout here, pullback, right? Bar 37, breakout, pullback, another breakout. So what do you have there? You have a buy zone there, right? So this is the buy zone. They bought and then pulls back. Now there's another buy zone here. In fact, this whole bar, 58 from yesterday, is the buy zone, right? So market comes down, tests it, bears failed, bears get another leg. Where is the follow through? No one's selling, right? You got a bar close below bar 1, but no one is selling because this is a handle. This is also a bull flag. Believe it or not, this is a bull flag. This is the pole. This is the wedge bottom, okay, or double bottom. Sometimes poles are short and the channel goes a little bit lower before going back and testing that high. That is still a flag. So we come down and or you can say, hey, I see a left shoulder head and right shoulder and we're selling. Okay, great. We're selling. Now, if that's your neckline, that's your left shoulder, that's your head, that's your right shoulder, this bar, broke the neckline. What do you expect from this pattern? Retest of the neckline and another bear close. Where is that bear bar? There's nothing there. In fact, we're now closing above the neckline. So that's it. Everybody who's here, trapped. So what I do is I measure that bar and I look for opposite side, a 1R, and I look for a 2R and a 3R, 4R. So that to me is a failure. And I'm looking for, actually it's a failure of a failure. So therefore it's a swing. The easiest way to figure that out, if they trap you, something looks really good, but instead it reverses and takes out its high, is I can measure that and look for measured moves up. Or you could say, hey, I'm looking at some kind of a double top and a double bottom. There was a double top there, therefore it's a bear flag. Everybody thought that that was a bear flag. Why? Because of the head and shoulders. Wedge tops create head and shoulder. Head and shoulders create bear flags. When a bear flag fails, we go and reverse it. So whatever this is projected up and then some, okay? So basically that's a double top and a double bottom, right? At the open is you always look for double tops and double bottoms. If you want to learn more about this, go to the bonus video 5, number 5, and please watch it. Al talks about how to trade the open with tight trading ranges or double tops and double bottoms. There's also how to trade the open video. You should take a look at that under bonus section of the course. But anyway, let's get back to our price action. So I got a double top here. I got a double bottom here. I got a bigger double top here, right? I got a bigger double bottom here. So first the double bottom, bears failed to break out. Then bulls went up and they failed to break out, but it pulls back, right? But now look what the bulls did. Bulls are going to take over. They already started to buy. Bar 5 and 6 is their entry. Stop underneath 5. That's 1R, that's 2R, that's 3R, that's 4, so and so. It goes on, right? So once we take out this high, you can also measure your measured move and go with that target, right? 1R, 2R, 3 and 4 before we come down and go sideways. So you could do that as well, right? But basically we had a support here. They bought it. So what do we have now? We have an inverse head and shoulders. We have a left inverse and head and a right inverse. And look at the right shoulder, way above the left inverse shoulder. So now what am I looking for? I'm looking for an entry bar. If I haven't entered here, I'm looking for a good buy signal bar. Bar 12 is not a good buy signal bar. Bar 13 is, it might need another bar or so. What am I looking for? I'm looking for a good body touching the EMA. I want to get in as close as EMA. I don't like the 14. I don't like the 15. 17 is okay, but it's just not all there. But 17 and 18 is a good combo. I can buy one tick above if I haven't entered already. You can buy it, then you can do measured move this way. Okay, so then I'll measure that for you. Good bar, you entered above. That's a breakout bar anyway. That's your measured move. It happens to be last week's high. Now we're actually getting another breakout. Hey, I'm going to extend it right there. And I'm going to look for a measured move there. Or you could say, well, we don't need to. That's the breakout anyway. So might as well extend your measured move that way. Or the right way to do it is find that and then look for a measured move there. Unfortunately, we couldn't get there. So some may measure from there. That's the open. You got the point. Anyway, so even if you're long, even if you actually measure this way and the market is going up and up and up and you're disappointed, what do? Everybody sees this bar. They're disappointed, but because they were on their way up to this target, they will buy at the EMA and fix it. That's the first entry. First time the bull's trying, pulls back again. Second time the bulls are trying, their eye is on this target, but they can't seem to break the high. If the one side tries twice and cannot break the highs, what do you think is going to happen? Well, those bulls exit out and the bears take it over. So what do you have then? Failure of a failure is a swing. Failure of a failure is a swing. You sell underneath 74, which is what I did. I told you guys I sold this. And I put the stop is, you can put it right there, but I generally put it above the first bear bar. But since there's not much of a room, use the pivot. And that's your 1R, that's your 2R. Look, they just tagged the 2R bounce. They're trying to come down and tag the 3R. But at this point, you can't really trade this, right? So your target was 2R. You needed to bank this and exit out. That's exactly what I did. And I had a trend line there anyway. So, that's a double top. But we do have a bull channel now. So we're testing the channel lows. I'm bouncing. It's a new channel. I would take that, take maybe like that, kind of bouncing from that now. It's probably trying to get back up to here, but I'm not trading this. So to me, this was a trap, but unfortunately, I wanted a little bit more, maybe go there and trap and then come down. So this puts us into a trading range. What do we have here? We have a manipulation, but we don't have a manipulation up there. Here's the 50%. Market could go up, manipulate, and then come back down and start to distribute the upside tomorrow. So tomorrow, we could go sideways a little bit, but market might be still trying to go higher, okay? So be careful tomorrow. We could go sideways a little bit, okay, and then reach those targets, because on the daily, I still have that measured move target. Now look what happened on the daily. I had an outside bar followed by an inside bar. Let me put this aside a little bit. So this is an outside bar. This is an inside bar. It's a bull bar, right? Market it pulled back to the midpoint of this bar. It pulled back the midpoint of this bar and then start to buy, right? So it opened here, came down, tested, and go up. So that means it's going to test Friday's high. It's going to test this is Friday, this is Thursday high, and it's going to test Wednesday high. From the Thursday high, it tests, right, and it starts to break out. So here's my first target, second target, third target. They're trying to close the bar above this level. So for tomorrow, we could continue to buy into here. So there's a measured move target. I've always had that. No, actually, I had a measured move target different. Then today I altered it. So I said we could end up going there. Now also, there's a trading range here, right? There is, however, leg 1, right? Pullback, leg 2, pullback. We're on the leg 3. So the leg 3 is trying to reach somewhere. Eventually, we will come down, test these and these highs, close these gaps. I think market eventually will come down and test this bear day's high. In that capacity, will test the moving average. But market is not ready to do that. So I do have a measured move target here that we haven't met. And tomorrow, we might actually tag that before coming down, if we come down. Okay, so I'm still hopeful. I'm going to still expect bulls to turn this trading range that they started at the end of today and test these highs. It could put us into kind of a bull flag. So we need to get above here, right? We need to go there, come back down. If we hold it, then we go test there. If we cannot get above it, then we come back down here. If we close above it, then I'm going to look to sell. So and then everybody else is selling. We go back and then we start to distribute. That will create head and shoulders pattern. And that will be the reversal. So the reversal is not going to be easy. I think the bulls still have targets above, but we'll see. So for today, I would invest in, and I did, which bar. So let me talk about that. Once I see the failure, I see 2 bars. I started to buy 1 tick above 7. First, I put it above bar 6. I had a buy stop order bar 6. I was still a little bit upset because not upset, but worried about not being able to go higher. But once I see the inside bar, they're buying above bar 5. Now I have a trigger signal to go swing. So I put a buy stop order above 6. I move it under on top of 7 because 7 closed bullish but lower. So I enter above 7. I'm long. I'm targeting this prior high. We got very close, but I couldn't get what I needed. What I got was 10 point. So I got a 10 point. I'm looking for 11 point close. I got the 11 point close, but they started to take profit. So I took profit, and I had a runner. Kind of got upset because my runner, I was really looking for these highs to be broken. I said, okay, that's not going to happen because the trading range, we have to come back somewhere. I measured this bull leg, and I look for a 50% pullback. That bar did not close bullish, but the next bar did. But because I have 2 bear bars, I'm already long. I still have a runner. I still have a 1 contract. I'm looking to buy again, but I don't want to buy prematurely too early. I'm looking for a good bull close above the moving average. Now, 10 EMA is above 20 EMA, so it's telling me this bar, I can put a buy stop order above it. Those who did that, they actually bought it. Limit order buyers also bought it, so the stop order bought it, limit order bought it, they're making money, right? You got a leg 1, pullback, leg 2, pullback, leg 3, breakout. So I'm long, I'm compounding now, right? And now I'm looking for, from this level, but first I need to measure. Bears couldn't get it, so I measured from here. From here, I'm looking for a 20 point. I believe I've scalped the 20 point, and then I decided to get out of the market in case it comes down because 20 point, but it was a little bit of premature, too early to exit because I never seen the bear body, and I kind of kicked myself there. I could have maximized it, and I didn't. Bar 21 did not close. It was bear at one point, and I was like, okay, that's everybody else is scalping with bar 21. And I thought they were going to close it bearish and then sell into the moving averages. Instead, they closed it bullish. I was like, what do I do? Do I buy? I didn't do anything. I waited for a pullback, and then I bought again. But how did I buy? Bar 27 was great. That was the first entry. I wanted to buy it, but I didn't have the guts to buy against 3 bear bars because all I know, these bears want a second leg down. If I buy now, I'm going to have to be forced to buy again. So I said, be patient, look for a second good buy signal bar. Bar 30 is not a good buy signal bar, but it's a trap bar. It trapped it. When a bad signal buy bar is actually a bear trap bar, I put a buy order right above it. I can even buy the close of it if I wanted to, but I'm buying with stop orders, so that's where I bought. Normally, I would not have bought bar 30 because it's not a good close, but because it's a second leg trap and the bears who sold underneath 29 trapped, I'm buying into that. Their stops are here and here, so I'm buying into those stops. So I'm expecting a couple of legs up. And then I start to get these bull closes. I didn't buy above 33, but I did buy above 34 because it is a beautiful bar. And then I bought above 35. So this time I'm just compounded so much that all I have to do was push to stop up. And then I'm counting flags at this time. Every time market is, so let's say this is 200 EMA. Market was down, and that's 0. And that's 20 EMA. Market comes down like this. Finally starts to get above 200 EMA, right? I don't buy the first pullback above the 20 EMA. I look for a pullback first, but once they get above it, I'm buying. I'm looking for a flag because this is a flag now, flag number 1. And I'm looking for another flag and another flag, right? So I'm looking for about 3, max 4 flags. And then I start to sell and look for EMA test and underneath test, okay? But if we are above the 200 EMA, most likely this is nothing but a deep pullback, and we're just gonna start the cycle once again. 1, 2, 3, 4, 5, whatever. So I'm counting here, right? We're above the 200 EMA, or 1 hour EMA. Market sentiment is bullish. Here is the get above. Look, I'm gonna get rid of this. We got above the 20 EMA. We have a flag, right? Right there. Here's your second flag, and we have a gap above the EMA. You have to buy. Gapping means market agreed, bulls and the bears agreed that this is such a low price. We're going to keep pushing higher. Here is your third flag. Here is your fourth flag, small flag, right? Here's your fifth and sixth and so and so. This one right here, this was so extended buying that it became unsustainable, right? It's going to go into sideways, and it's going to trap. It's going to trap the bulls eventually, and it's going to come down and test these necklines. If these are double top, neckline. So you got a failure of a failure, or failure of a failure is a swing. And then you can sell there with a very small risk you can take, you know, the opportunity to sell, and you make 1R, 2R, whatever. So you make pretty good there. Anyway, so back to I bought here. It took a little bit of profit, but nothing happening. I continue to buy, right? We are not moving underneath these bear bars. Nothing. Look, bear bar, we're not moving under. Bear bar, we're not moving under. We did move, but the bar closed bullish. I even bought above 45. That's a trap. That's also high 1, high 2, right? And market is going up. And I didn't buy above 49. I expected profit taking. They didn't disappoint me. 51 was a profit taking bar. But what did I tell you about 51? It's a profit taking bar, but not necessarily bears are joining the sellers. Okay, that is a profit taking bar. That's just bulls scalping heavily. You can, anybody who's trying to sell, because it's a very decent bar for bears, anybody who's trying to sell, they have a sell stop order. They want a second bear bar. They never got it. You got an inside bar. Once this bar, bear bar's high is taken out, they cancel it, and then they buy above it. And this is how I measure my target, because that's a failure bar. That's your 1R and that's your 2R. That's a failure, right? You need to measure something. So I generally take those into consideration. And it's also failure of a failure is swing 1, 2 bars. You can even measure from here. You put a buy stop order above 53. Your stop is below 52. That's your 1R, okay? We go above, but not with consecutive bars. We come back down. They buy again, fix it, because they were going into here. Bulls wanted 2R, but disappointed. They bought again, reach back up here, but second try, they're not able to get a breakout. I have tried to get that breakout. I really did. I tried to stick to that as long as I can, because I was looking for 55, 64, 64, 50 tests. But second time they buy and they cannot break out, then you're going to exit out some point, because there's a failure of a failure swing setup. Here's a failure. Here's a failure. Swing, stop above, 1R, 2R, you're done with the day. Okay, everybody. So I hope this is helpful. I think there's a question here. Let me take a look. There are actually a few. How do you determine which bar to pick your ATR measure from? Okay, I actually did a thorough explanation of this. So basically, I'm looking for breakout bars, right? I'm looking for, let me see. Hold on, give me a second here. Going to, I have an ATR there. Okay, so from the open, so I look for breakout bars, okay, such as from the open, let's see, okay, from the open, bears, right here, right? They have a breakout bar right there. Where's the breakout? Is right there. So let me mark that. Here is the, let me do this. Here is the breakout, right? 90.75. So basically, market broke that level. That's a breakout. Is what will they do? So you can sell the close, perhaps. I don't like to sell the close with market order. I like to either sell with a stop order underneath, or I sell the pullback. So I'm looking for a pullback sell, but there's a pullback. Problem here is that market didn't take out that bar's low. It also pulled back, closed a really strong bar. When we start to get above several points, okay, I don't like to sell. I don't expect. So it should have done this. It should have go up and start to sell. Then I would have added whatever the ATR at that, say it's a 4-point, I would look for a 4-point scalp there. So this one failed for bears. Anybody who sold early got trapped there, and their stop ran over. So now I'm looking for bulls. So I'm looking for a bull target or bull setup, right? And like there's one right here. So I'm going to take that. There's a breakout right there. So I'm looking for a pullback to that breakout, 98.75. Bar 9 did that. Look, bar 9, that's, sorry, let me do this the right way. That is the breakout. That is the pullback, and I want to buy. So I put a limit order there, and the ATR at that time was 4.3. So that's 4.25, right? You cannot roll it up to 4.5. You have to roll it down. So that's 4.25. So that means is 1 tick for entering the trade, 1 tick for exiting the trade. So I have about 3.75 there. So what I can do is I can either grab half of it, or I can look for a 3.25. So let me, yep. So look what I did. So ATR with bar 9, where I entered with limit buy at 98.75, was 4.25. 4.25 is exactly, you got 4.25, but you can go for one time the ATR, but I like to take out 2 ticks just to be safe. 1 tick to fill me in to the trade, 1 tick to fill me out of the trade. So that means I have 4.25, 4, 3.75. I'm scalping at 3.75. Every other, okay, greedy trader is looking for 4.25. They get their 4.25, but they never get filled, and market goes against them. But I am smart because I listened to Al so long that Al always says you should always take out 2 ticks from your trade if you're scalping. 1 for entering, 1 for exiting, right? I mean, he has mentioned this so many times in the course, in his live webinars that I've listened over the years. I have learned that I don't need to be greedy. Nothing has to be perfect when I'm trading. What's perfect is, what is perfect to me is at the end of the day, my green P&L. I walk away and saying that it was a perfect day because I kept that, P&L green. I did a perfect day because I reached my daily goal. I did great. I don't need to get that extra 2 ticks, okay? And in between, ATR can also go down. Like, for example, ATR was 4.25 there. What happened there? Let's take a look. ATR came down. Actually, it didn't came down. It was still 4.25. And then here, it was still 4.25. So it didn't really came down. It didn't really come down. So I actually did good scalping there. And because of that, I got rewarded. Everybody else got stuck there. Okay, so there's another one. So let's take a look at the next one. Where's the next breakout target? And that is, I believe, here. Right there. So I have a breakout right there. So that no, wait, that's not it. Here maybe, or here. Well, we didn't get a pullback. Well, let's figure it out. So here's a breakout, right? But really, that's inner lower high, so that's not good. But here's a breakout. Okay, so here we go. You got a breakout here, right? And you marked it, and you're looking for a pullback to buy it, but you never get it. Then what? Your next breakout is right here. So that is 0450, right? And look, we got a breakout, but we still can't come down to it. So what do you do when a situation like this happens? That's a buy to close bars. What do? I just buy one tick above. It's a breakout, okay? If it pulls back, that's a limit order entry. And then it goes back up and fills me, that's a stop on order entry. Limit order plus stop on order together is a swing entry, okay? So basically I can enter with both, but I like to buy with a limit. So limit order, it never came down to the breakdown, 03, and then they bought it anyway. You can even buy in this bar, right? So let's find out. So say you bought it maybe from here or from this breakout point, 0450. ATR was at that time 363. So that is roll it down 3 point and a half, right? So I am looking for 3 point and a half. That's 1 time the ATR. 3 point and a half is literally the high of this bar, right? So no, yep, that's it right there. So they reached theirs, and then they bought the close. So if you couldn't scalp there, you probably couldn't, but you scalp with this bar. All right, now they close another bar. So now what you can do is you can double it. So, but take a look at the ATR. If it came down, then you have to do the math according. Okay, so that's 350. So 350 times 2 is 7, where you entered. So I'm looking for a 7 point. Yep, right here. So here's a 7 point. That's 2 times the ATR, right? Yep, just about. You take that, and if you're still holding, that's a runner. Who cares? But this is what you should be banking. They closed the bull bar, right? But look how much it went. It went up a little bit more, and then it came down. This didn't have to happen, right? You already maximized your profit taking with ATR, 2 times the ATR. Okay, so that's what you would do. Now, you're going to ask me, where do you put your stop? Where do I put my stop? So you can do 2 things. You can utilize, if we have a breakout of these highs, you can use this higher lows, because anybody who bought down here or bought above these bars, their stops are here, maybe here. They're going to move the stop underneath this higher low because we have taken out that high with these bars. If the risk is too much, I generally double the ATR value, and that's my stop. So if I enter here, and I'm going for a 1 time the ATR, and that was 3.5, right? So I'm going for a 7 point, but I never do 7 point. Now, some people can do 10 point, right? Normally, that's what you should be measuring, 7 point. I don't like to do that. I don't like to lose more. So, because it can turn around, anything is possible. My max is 5 points, 5 point. So I use 5 point. But if there's a good higher low, I'm just going to use it underneath. I can handle a couple of ticks, but I try not to go more than 5 points. And if the market is going like this, then I trail it. So 5 points, right? And then I say prices with bar 21. Here's a 21 close. My 5 points right there. My stop is right there. It's trailed up. It keeps going. Say now I'm with bar 22 close. My stop is trailed. I actually have examples that I did and posted on my Discord as videos, how I measure. You can watch it from there as well, okay? So that's how I measure. Okay, let's go back to another example, and I'm going to be done with this because this is becoming a long training session. Where's the next one? Next one is, where's the next breakout? Right there. Here is the next breakout. Right there, right? This bar is a breakout bar breaking above bar 21. So where is the pullback target? I'm looking for a pullback, right? Here is, you can buy above it, but it has to pull back. If you're looking to buy a pullback, you're going to put a buy order there, okay? and then you're going to look for a bounce. So here is these bars come in. This one breached it a little bit, but it closed above it. So you already entered with either 25 or 26. At that time, ATR was 3 points. Okay, so I have a 3 points there. Now you can scalp half of the ATR, which is 1.5, or you can go for full 3 points, which is right there. Since I take out 1 tick or 2 ticks, right, that could put me into 250. 250 is more than 225, so within that I have a great, perfect scalp there, right? So I scalp that, and the market comes down. Look at that. Now, where's the next one? The next one is here. There's this one. There's a breakout above 33 with a bull body, right? I'm looking for a pullback to 1650. I got it. Now, what's my ATR there with bar 35? 35 is the pullback and filled me into the trade. That's 344. There's no such thing 44, so you have to roll it back to 25. So 3 points and 25 cents. Take out 1 tick for entry, 1 tick for exit. My one time the ATR is 3 points. So market is telling me you can make a 3 point here, but bar closed it, so I scalped there. I banked that. I put it in my pocket, but the bar is still going. The rest is a runner, right? So I'm running this. Now, if the ATR at that time still 3 points, or did it go up? Oh yeah, it went up to 491. No such thing 491. You have to roll it down to 475. ATR goes up, your profit goes up. So 475. But you can also double it because bars are closing beyond those targets. So what is 2 times, right? So 75 is 1.5, is 4, 8, 9.5, right? 9.5. That's 2 times the ATR. You have to take this. You have to take this. And if it's still going up, that's great. There's got to be some kind of another breakout there. Yep, there's another one right here. You can either measure from there. All of this is basically your runner running. But this is where I would take a lot of profit. Because at that time, no such thing 3 times or 4 times the ATR. I don't do that. My max is for 2 times the ATR. Anything more is just bonus. Now I have another one. I'm done with this one. So I'm now calculating for this breakout. Breakouts from above bar 39. So I'm looking for but that's inner. You should take this instead. 3025 you should take that one. I don't like the inner structural breakouts. You should take that one. So what am I waiting for? I'm looking for a pullback. I want to enter at 3025. Well, this made me nervous. I was actually trading this. Market comes in. It filled me, right? Filled my long trade. I'm looking for about 3 to 4 bars to get my one time the ATR value scalp, or 2 times the swing. I entered there, and the bar 42 made me nervous because it closed there. I'm like, oh no, are we going to be selling here? Because my stop is 5 points away. I already entered long. But I have, market will give me at least 3 or 4 bars. So it's 15 to 20 minutes to give me at least 1 time the ATR. So what am I counting? I'm counting 3 to 4 bars. So I need to be patient because this is a breakout pullback. I bought the pullback even though it closed a really good bar. So now when I entered the trade with 3025, ATR was at that time right there and it went up a little bit, 371. So roll it down, 350. So I have 1 time the ATR, 350. Take out 2 ticks, that's 3. So market is telling me, hey girl, just take that 3 points. I'm giving you 3 to 4 bars. Here is 1, 2, 3 bars. That's my 3 point right there. I got it. I got it. It even went one tick above. I got this. And then it gets another breakout. My gosh. So I can either calculate for this, or I can stay in the trade or hop on. Now I'm looking for, right, what is the ATR when that breakout happened? That breakout was 4.5. So 4.5, you can calculate, look for 4.5 right there, or 4 if you take out 2 ticks, or double it. What is 4.5? That's 9 points. Hello. Oh yeah, look at that. 9 points. Take that. Now this is the next breakout, but look what happened here. We never pull back. Instead, it just keep going up. We never pull back. So if you were looking for a limit order pullback and enter at the 34.75, you never got it. What happens when you start to see this? Just enter the trade. Calculate 1 hour and 2 hour and take profit. So from here is another breakout right there. So I'm going to calculate it now. And that was 5 points. So you're looking for 5 points. So from here, you're looking for 5 points. That's 5. You got the 5. Take out 2 ticks is you got a 450. Now you got another bull bar, so double it. 4, 5, 10. Take out 2, 950. Check that out. 950 right at the close. And it went above, so it gave you a lot of room to scalp. And then you get another one. I mean, I love this. Here, you got another one. It goes without coming down, okay, with the next bar. It didn't feel you, but it comes down and feels you with bar 57, right? Not too many bars pass. So now, okay, you're filled, but you're nervous. 57 close like that. The market generally gives you, if it's a bullish breakout, minimum 3, maximum 4 bars to get your target. So you entered there. The ATR is, or was, 645. So roll it down to 625. One time the ATR is 625. When the ATR is so much, I generally scalp half of it. I just bank that. And then I leave the rest to one time the ATR. So that was, I forgot, what was it? 625? Yeah. So it's 625, take out 2 ticks, that's 575. So you entered here, that's one time the ATR. Now look at that beautiful accuracy there. Somewhere in here, you already scalped it and then held it. And then look, and the market came down. It's not coincidence, it's just that machines are smart enough to do the calculations. Okay, okay, I'm done with this example. I think to the person who asked this question, hopefully you learned something and this makes some kind of sense and you can test it out. Okay, okay, so let's get rid of everything. Let's take a look at the other questions. Stop loss is, you can use the prior highs and lows or you can use the money stop. So it's a fixed amount of points that you are willing to lose. Right? In my case, it's 5 points always. I don't think I can go over that strategy right now because it's already 48 minutes after 4 o'clock and I'm about to pass out. So, but I can do that next time. And I believe it's Wednesday. So I have the, no, wait, Thursday. I have the Thursday afternoon. So could you bring that up? And in fact, bring that up early on. So I have a, I can open up a chart for you. I'll set up the chart, okay, ahead of time. And then we'll go over it. Okay, so this way we would have a longer time period because I'm very tired right now and I don't want to go over it. Not that I want to, you know me, I'll go over it. I just love price action. And especially talking about things that works for me, that things I know. But it's just too late right now. It's already been 50 minutes over. So yeah, Thursday afternoon. Hold on, let me check something real quick. Tomorrow I'm off. Wednesday is holiday. So Thursday afternoon after Tim Stout on the 20th, we can do that. In fact, I'll put it on the chart and I'll show you guys how I trade with it, okay, on the chart. All right, next question is, yeah, I'm scheduled on 20th in the afternoon starting noon. We have 4 hours to go over it, which is the pit stop. Yeah, pit stops are 10 points, but the price points ends with 5. I call the 5 points in between the 10 points as a buffer. In the afternoon, yes. So nice. Yeah, you're welcome. No problem. Okay, these are the end of my questions. I believe I answered everything. And let me take a look at Discord. There is nothing here. So therefore, we should start or end the party with a bang. Okay, everybody. I will see you guys Thursday. Bye, everyone.